Testing. Chart. Good morning. Good morning. need a different setup. All right, well, that's great. Where am I going? Maybe. Oh God. What is this? Yikes. Got news. 2 o'clock today, and at 2:30, we got the FOMC meeting. So, trying to figure out how to. Oh, these are new. It's a set to plummet. Whoa. Wait, what? 22. What? No way. Where's the point? Mm. Good morning, good morning. I'm not tired. Who's yawning? I'm not tired. Trying to do some math here real quick. I can't think because the wrong songs are playing. Math is rusty this morning. Excuse me, my math is rusty this morning. 20. For the week, and then 5 days a week. That's how. All right. All right. Good morning. How's everybody doing out there? How we doing? Damn, I missed my short entry. Darn it. Will we open up for 2 minutes for the candle? Did I miss a good beat? I missed my short entry. That's all right. Sorry, I had to listen to that. Sorry, guys. If you didn't enjoy it. I added some jazz to it, y'all, because, you know, we gotta respect the people we got in here. So. Short entry. I should have set a limit. I'll put it on one contract just in case. Small scalp. I was actually looking at try to hold it. Chase waves. That's the name of this beat. Trace waves, not trades. Oh, let's make that our banner. Chase waves, not trades. I mean, I'm not a surfer, but I like that. Or should that be our title? We can use that for a title one day. Add it to our list. Too bad I can't access the emoji keyboard because I would put FOMO and then, excuse me, actually can I? Use custom. "26 minutes until the bell opens." I don't know about chasing waves. That's a little. Look out yesterday's high. There's liquidity sitting at the liquidity sitting at the Let me put one on. And then if it goes my way, I'll add it. Because it's that's my entry. My stop is where my entry should have been. It's in the kitchen. I was in the kitchen. And we could just really bounce out of this range, but maybe get short. And then buy. That'd be nice. One second. Let me get my iPad set up here. Whoa, sorry. Oopsie. Sorry, guys. Maybe I should, like, get a different mic, like, mic stand. Where it sits. I'm vibing. I'm chilling. I'm good. I'm kicking back and I'm. I'm vibing. I'm chilling. Who we got in here today? What's going on? Good morning. You don't have to say it back, but good morning. Great rising, grand rising, whatever you say. Hi, sunshine. Wake up and get it. Say your prayers first. Give thanks. What's the first thing I do when I wake up? Give thanks for another day. For another chance to prove I'm worthy. Knowing humans are so... we got our ways, you know? We gotta give thanks. Thank you. What? I'm vibing. I'm gonna add to this. We oh yeah, if you ain't rocking with God, this one ain't for you. This is not for you. That's nice and saucy. I think we got this whole, like, yeah, thing to get through. So, like, part of the list. Sorry, guys. I just skipped through this music. For those people that don't like music, skip it. I can't make this up. Wow. I was wondering where they were going with that one. That's the good old jazz. Yo, no. It is a great morning, great rising. How are you? It's a good day to be alive. Trying to. I mean, I respect it. I love jazz, but he's something. Yep. Yes, indeed. Come on, y'all gotta give me something. At least something. Is this silent night? It sure is. That's nice and mellow. Hello, mellow fellow. We'll start, but we're gonna skip it. I'm sitting in this trade. Market's open in 15 minutes. Hopefully it doesn't do what it did yesterday, which is go stop me out and then went to my target. I mean, just stop me out. Good. Gave me some profits. It wasn't deep in profits. It was like $70 in profit. And went to stop me out. I was risking 200 and then turned around and went to my profit target. And by that time, I forgot that I was waiting for it to get to my profit target level so I can flip it and buy from there. And that's what I'm trying to do today. But it depends on what the market does. So right now, looks like they're trying to bounce from here. Let's see, 30. Oh yeah, they're bouncing. keep it here, but we won't be greedy. See if we can get to those creme brulee. Creme brulee. How do you say that? Anybody trading with me today? Is anybody trading anything? Or are you just observing? Either way, I appreciate you stopping by. Appreciate it. Appreciate it. What is this guy babbling about? What are you talking about? I don't know, sir. This is a nice and mellow one, huh? This one is really nice. So we could bounce. We could bounce anywhere in here. Such a cluster we've been in. The market is like a magnet to the zone here. Raw umber or burnt sienna? Is it raw umber? I can't remember. It's one of those colors, but this box right here. Since 2024, the market just breaks out of here and comes back here. Breaks out of here, comes back here. Breaks higher, comes in here. Breaks lower, comes in here. So, just in case you were wondering what those lines were. Sorry for clearing my throat on the mic. We'll make me some tea. Gemini. Get my act together. Lockdown. Market's open in 10 minutes. 10 minutes, folks. What do y'all think Powell's gonna say later? Payroll show up stronger than expected. Blah blah blah. Data. The data reflects. Y'all was in here going to sleep with this, huh? Sorry, not Jingle Bell. What kind of game they playing? No, I don't know. Oh, that's I forget who used that right there. Don't. Was that nice? Did y'all like that? Damn, my water boiling. All right, well, here's the pullback. Here's the pullback. So, question is, do they run up to my stop? It's all right if they do. If I still believe in the trade, I'll just get back in. They break that, they might break my snap. Then again, market opens can get a little crazy, so you know. We don't want to go to sleep. We don't want to go to sleep, right? Sorry, y'all, but let the other list play, but I'm trying to find some. Jeez, give me something. Give me a little something. No, they didn't. No, they did not. 2 minutes until market opens. 2 minutes until market opens. You know, I just really don't want them to do what I think they're gonna do. We don't want to hurt you. We just want to kidnap you. Anybody seen Three Ninjas, Surf Ninjas? Or was that Three Ninjas Kickback? When they said that? Oh. Markets open in 16:15. There's a delay, so 4-second delay maybe. Hopefully it's only 4 seconds and not like 8. There we go. Markets are open. Whoa. Sorry, y'all. I could barely hear that. I didn't realize. I'll turn it up a little bit. Good Lord. Uh-oh, they bounced it. They definitely bounced it. Retracing back up there. Really bounced that. Yeah, I said we could have bounced there. Support everywhere. Trade was like $50 in profit. It has currently turned around, down $16. 20, 29, 28, 37, 29. What are they doing with this? Alright, that's it. That's it. I'm just gonna... I can't keep doing it. Can I like... I don't remember adding this stuff. I don't want to keep looking for a song, so I just put it on something that has played before, and it, well, kind of rotate through these different songs. Still sitting in it straight. You gotta sit in it until either we get to where some profits. One of our levels, stop level or take profit level, right? Go hit one of them. It would be nice if it was the latter and not the former. We got some sellers stepping in here. This even be oh. That's a support. That's a support for now. Thinking if I should cut it. I'm not sure if they're going to go much lower. Our overnight lows way down here, so let's see. Let's see. Might be a better take profit level. But FOMC is today, so I don't want to expect too much. But again, the market is going to do what the market is going to do. It does what it does, right? Fire stepping in here. We got 19 minutes on the 1 hour left. Yeah, that was definitely a support. Should cut it there. I mean, if it hits my stop, then it's like, oh, I should have cut it there. Yeah. He is bullish. Still in the trade. I can't even separate it to get to the jazz ones that I just. That sucks. That was a buy. We're back up in that range. It's around. Hook that slope and resistance. would have had another chance at a better entry. Since we pulling back so deep. Hey. Nope, the Bulls ain't having it, huh? Trying to push it down, but the Bulls are saying nope. Yeah, doesn't look good. Does not look good. So now they want to go there. That's where I thought they were going this morning. I don't know. It just flushed. It's just, you see that? It just flushed. Would they give me like $70 and then it bounced? I don't know what that was. Somebody know something. What is going on? Did y'all see that? Did you see that? Is anybody else? Are you watching? Are you watching the charts? Are you watching my screen? Did you just see that? Just how it just dumped like that? Man, I was like, this isn't looking good. I think we're gonna take care of that business. Maybe not 70. It makes me nervous holding this trade. Like, now should I cut it? Cause y'all, what are you doing? Trying to process what's going on and if I should stay in this trade or not. I mean, the rejection was good, but yeah, it's probably gonna just bounce now because that was too fast. So. I almost set to yesterday's close. You know what I'm trying to do though? I'm trying to just work on holding my trades longer. And because if I take some overnight, I won't be able to manage them. But this, I don't know what these people are doing right now. They're pushing it right back up. There you go. Wild, wild markets, guys. Like the wild, wild west around here. Definitely some salad. Did you see that? Ain't shit right, exactly. How that stop loss in place? Right back up here. It just, I thought it was gonna stop me out. I'm like, alright, it's stopping me out. Let me look for another trade. It just flushed. In a matter of seconds. I don't know what that was. And then I'm like, should I cut it? Because I wanted to cut it. Because they play games like that. It's just gonna, price is just gonna come back up. Right to where it was, and that's exactly what it's doing. But like, if they would just leave the markets alone. Actually, I don't know. I don't know if it was news or what. Had them stocks in place and don't force trades. You trading today, Court? Hi, Miss Dawn Jackson, auntie. What are we doing? That's why I'm not even trying to look at it. There we go, back up there. See how I just recovered that recovered that whole move. Meaning this drop, this big white candle, it flushed, and now prices moved right back up to that level that it flushed from, which is 19,936.50. So it sold down to almost 100 points and then just bounced. I thought it would go a little lower. But could just chop around here, really. FOMC day. Could run up, we don't know. Could stop me out right here, right now. In a second. It was like I gave you a chance. Now I'm gonna take your stop. Because you didn't take the chance to get out. That's what happened. Is looking like it wants to have some sort of bullish continuation. Maybe. This thing can run all the way back up. I thought it would take out this level and this level. This level. I'd only put one on and try it straight out. Risking $100. Pulling back here some. Just sitting in this trade, you know. Nothing to see here. Not doing anything. So buyers. This trade's gonna stop me out. We got kind of like a hammer going on here, a bullish hammer here on the 1 hour. Which is a candle. Type of candle formation. Looks like a hammer. Big long wick on the bottom. Smaller body, small wick on the top, sometimes no wick. And if it's bearish, it's actually flipped. Let's see if we can invert it. And it'll look like that. This is what a bearish hammer would look like, with the tail on top and the hammer part on the bottom. Small body on the bottom. Wick or no wick. Definitely push price up within that hour candle. Hey, but volatility is nothing like it was a month ago. When we were having 100-point candles. That was wild. That was definitely a wild ride. Is the market coming back to us, or is it teasing us? What is it doing? Oh my goodness. Oh. I think it's I think that was time to go long. Crossed. This is looking real like go long. I'll move that just in case. I might want to touch that 100 day or even this level. Still less than not risky. Not too late. 126. Ain't that? Let's do 220. Oh yeah, no, that's. You can broke that, so yeah, it's rubbish. I'm a little past my $100 I was originally risking, but I just want to, I don't know if they're going to touch. They might touch VWAP. They might break this level right here. Could be forming an inverted head and shoulders to go higher. I am not sure. But It's bullish now. It's funny because I was thinking they were going to go test these areas down here. And then I was going to get out of my short and look for a long there. But it looks like the long came earlier than I expected. Came close to yesterday's high. I mean, yesterday's close, so maybe not too early. I was just in a different trade, so my bias kind of maybe missed that. The market is just kind of slowly grinding higher. There's some rejection here underneath the 100-day moving average, 100-day EMA. My stop sits above it because I figured that's where we could reject. So give myself a chance to potentially for the trade to turn around. If not, it's all right. It's FOMC. It's FOMC day. Just a little bit chilly there, just a little bit. Pull back to go higher, maybe. I think I need to get long hair, guys. A long time ago, huh? With the hourly. And if we close 42 minutes, I'm about to flip it. Because if we get a morning star on this 1 hour, ooh, price, that's gonna send price higher, way higher. Potentially to take out these highs at some point. Maybe not today, but it'll definitely happen within the next couple of days. The morning star is a kind of candlestick pattern that forms where you have a candle that closes. You have a candle like this white candle here. Then the second candle will close. You have a lower high and a lower low. And then you have this kind of tail here where the buyers push it up. And this next candle needs to close like equal to or above, somewhere around there, this previous white candle. And let me see if I can draw it. And so if it does, what you will have is, maybe I can use the box. If you, if it does, what you will have is something like this. Give me 1 second. Let's make the box right. If it does, what you will have is a candle that looks something. I don't know if I put it in. Well, anyways, the candle will be like this. Alright. Anyways, imagine this candle is overlapping this. Then this candle closes here. It'll look like that. That is horrible. And what that is a morning star pattern, meaning it's going to send price up just like how the sun rises. That's how I remember it. It's a morning star pattern. And if it happens the other way around, where you have a candle, imagine this is filled in. You have a candle that closes, you have a candle that went higher, and you have kind of a body on it. It's hard to use this drawing tool. And then you have this candle that closes. Well, that's called an evening star, and that'll send price lower. Yeah, it's hard to draw it with that. Let me see why it's flirting around my stop. Let me see if I can find one. Oh, I can find one. Like that. Switch charts here. It's probably gonna stop me out. I've already accepted the law, so whatever. Whatever. Oh, here it is. Something like this. This right here, this pattern formation. You guys see that with these 3 candles. You need 3 candles to form the pattern. And this is what it would look like right there. You have a doji. That's kind of a spinning top, right? Whatever. That's the pattern. So that was bearish. If it's bullish, it'll look like this. So just invert it. And if you didn't see it, you should be able to rewind the chat. Actually, I don't know if you can rewind it. If you can rewind it, let me know. If not, I'll have to look into that. But yeah, that is what a morning star looks like. The evening star is the reverse of that. And so if we can form that on the hourly chart, see that? Now see here, these 3 candles, you had a morning star, and these 3, or evening star, and these 3, you had a morning star. Well, you had a big wick here, so, but it sent price back up to test these highs before rejecting again. Rejection, and then a retest of those lows, and then it sent it higher. Oh, look at that. Hasn't stopped me out yet. Yeah, look at the cloud. But you know what, it could, buyers, buyers, buyers. There we go. About to hit my stop. Stopped out 130, 130, 131. I actually want to get... I'm actually gonna close this. I'll risk that much. I'm gonna close this. Oh, they did not. This is a slow opening, 1026. Initial balance is established in 4 minutes. We got about 100 point, 102, 103 point range here for the initial balance. If this hourly does not continue to push higher, then I have to wait for something else. Is it 19? 19998. 195. Yeah, 6466. Coming up on VWAP. It's been slowly grinding higher. That's the VWAP here. Testing, testing. Broke through VWAP there. Let's see if this is a real move or we're gonna push, or we're gonna pull back. 970s. Looking for those 995s. We're at 970, 274, 19,974. That is 75. I have a take profit up there at 995. Looking for this to go to 998. You know what? If we hit 998, wait a minute. That means we complete a morning star, and yep, we put in higher lows. Let's look at the hourly. We got higher lows. If we get there, I'm actually gonna move this. Moving this. I have a mental stop for this. And we'll put a level here that lets us know if we get there. The larger time frame says we're going higher. Now that doesn't mean it won't. We won't get a big pullback, because we could get a pullback to. Let me not just speculate. Let me just see what the market is doing, but we could get a pullback to the stock if it wants to form this kind of lopsided inverted head and shoulders to send us higher. I'm gonna have to hold on. Let me see how many. It would be crazy if we reject and then go to NASDAQ. 27 minutes, 30 seconds for this candle to make it up there to that purple line. Fed rate decisions is at 2. FOMC is at 2:30. Do we want to stream it here and listen in? I can. So you can listen to what Powell says and see how the market reacts. We'll try to do that. Let's try to pull it up for later. Actually. Okay. Today, 5, 7. Come on. I have to wait till it gets closer to it. But the Senate testifies on the state of international financial system. We might want to hear that. Wait a minute. Wait a minute. Because I thought he was supposed to do that at 12. Oh yeah, 10 o'clock. We missing it. We are missing it.
Military junta.
Let's see what
the atrocities continue. My district, the 4th District of Michigan, is home to
Can you guys hear that?
1,000 of these ethnic Burmese. And I'm just asking you, we need to do more to protect the people of Burma and stop the genocide.
We missed
Yesterday, I reintroduced the Brave Burma Act, a bipartisan piece of legislation that would require the president to determine on an annual basis whether to impose stronger blocking sanctions against the Myanmar oil and gas enterprise, the Myanmar Economic Bank, and foreign persons operating in the jet fuel sector of the Burmese economy, which has been a tremendous amount of their revenue. And it further limits the junta's ability to borrow at the IMF, which I think is one of the issues that the chairman was touching on. So these actions would target the heart of the military junta's revenue. So can I
is there an echo?
continue to work with my staff and us on a bipartisan basis as we try to address these issues in Burma?
Congressman, we're happy to work with your staff on this legislation, and thank you for your leadership on this issue. I share your concern about imposing consequences on persons who threaten the peace, security, and stability of Burma. Treasury has tools to continue to take action for the people of Burma, and working with you, we will continue to do so.
That's great. And what's frustrating is while some of these sanctions have been put in place, sanctions only as good as the willingness to enforce it. And we have seen them receiving financial support, the junta, from around the world, especially, frankly, as they ramped up production during the last.
Okay, we couldn't. Whoa. Okay. Just. Alright. Sorry, that was loud. We're set up for later so that we can. Jeez, that was loud. I am so sorry that. Yikes. My speakers was up. Falling around here. Gotta pull back. Testing that VWAP right there. I would like to see it. One back here. It do what it did yesterday. It ran, it stopped me out. My stop was above here. Yeah, my stop was above here, above that 100-day moving average. So it went a couple points higher than my stop. If it, nasty. That nasty. Alright. 17 minutes into this 1 hour candle closes that I'm watching. We needed it to close about 37 points higher. And it does not look alike. Doesn't feel like we're going anywhere, huh? Broke above initial balance high. Initial balance is established, by the way. We didn't even break up. Did we break above it? 77. So yeah, we broke above it 3/4 of a point and then pulled back into it. So see if it goes to test it again. Should go test it again. What was that? He's got his strength. Well, that was weird. Come on, market. Can you get there or can you not?
We want to make sure that best practices employed in the U.S. are also employed globally.
The reason I ask that is, and if you could specifically comment on the clearing of U.S. sovereign debt outside of the United States, what risk could that potentially present? And I come at that from the perspective, if there's a challenge in the market, if it's a U.S.-based entity, then the regulators who would make the difficult
Says talks with China on Saturday are beginning for talks, not advanced
they
discussion.
might have a different perspective.
That's what
We
the
are
said.
constantly
And that's
studying
who's
that,
speaking
sir.
right now.
As of now, we do not believe that
And that's
it presents
why
a risk, but I will,
we
as
moved
we
this up.
continue our studies, I will have my staff interact with your team.
Absolutely, Mr. Secretary. And one final question. Primary dealerships has become an expensive proposition for firms, which in one explanation for participants leaving the market, one of the many explanations. Should we be looking at ways to make the environment friendlier to investors wanting to become primary dealers?
Sir, we saw at the recent auction very low participation by the primary dealers, which tells me that there may be the
Couldn't get that more.
regulatory function there that is preventing them from using their balance sheet for the benefit of the U.S. Treasury.
So clearly, the task force that Chairman Hill was kind enough to set up and yourself, we have work to do. Thank you, Mr. Secretary. I would yield to the gentleman from Michigan.
Thank you, and I can get my China question in, so I appreciate my colleague doing that. I want to talk a little bit about the international financial institutions, the IFIs, such as IMF and World Bank, and they're falling short of addressing key challenges. So China, whether it's in Africa or Burma, has really engaged in a debt trap diplomacy. How should the IMF really help borrowers take the fund's advice when it keeps giving China a free pass?
Well, Congressman, as I said in a public interview after one of my IMF speeches, it is time for China to graduate from developing country status. It is the second largest economy in the world. They are a large, important economy, and they should no longer be granted the status of a developing economy.
I'd like to invite you, Mr. Secretary, to continue that answer in writing. And I thank the Vice Chairman and Mr. Lucas. Let me call on the gentleman from California, the ranking member for our Capital Markets Subcommittee, Mr. Sherman.
First, a parliamentary inquiry. Since the last speaker had an extra 30 seconds, can I have an extra 30 seconds?
Right. Oh, solid. we gotta, yeah, DLC right there, support right there. That's in the cloud. They about to bounce. I can lock my profit there. More volume. Failed a modified order. I'll take some quick scouts here. Could bounce anywhere here, so. Price stops. Still risking the same. Actually, I don't. Still got the same bias that we come testing this range somewhere or yesterday's low. That's what it did yesterday, right? I said if it does the same thing where it stopped me out and then goes, well, we don't know. We're still in initial balance. We're rotated from initial balance highs to initial balance lows. So we'll see if we can break those lows and continue lower, or if we just bounce and trade back up to the middle or back to the top of the range. If so, that's okay. We can fade the extremes, which means sell the highs, buy the lows, and keep our stops tight and see where we can take some profits at. Okay, we just broke the low, so I moved my stop to the low. Still flushing. We're flushing. 134, 141. I actually take that. I tried to exit the blue. I'm glad I did that. I tried to exit the position, and I actually pushed exit on my stop. But there it is. My stop was hit. Still got the same bias. Up 27 bucks for today. I'm actually gonna get back in for a short, but I just want to see if they bounce here, pull us back into initial balance, and then fall, or 5 minutes left in this 1 hour candle. 1 hour candle really flipped, didn't it? This is the same 1 hour candle that, here it is, the same candle that I was seeing if we could go take that purple line out to make a morning star, but look, we've completely reversed it. Okay, so here it is. Okay, we're pulling back in there. Let me say when my stop. Let me say when my stop will be. I need to get in. Still got the same bias. That's why I want to get in. Testing yesterday. We just broke through yesterday's close. And they are flushing. They are not going to let me in. I got to pull the trigger. Yeah, with the daily. This is bullish. I mean, this is bearish. Bears are strong here. Okay. I want my stop to be above this candle. That's why I'm. Get the cloud. Taking it. Do risk a little more. Allow me. Patience, man. What are you doing? Bugging. 3 minutes. Yeah, we're coming here. Come on, go to my target. See where it goes. Looks like they're trying to turn this level into support here. Just flush. 2 minutes left in this 3-minute candle. 2 minutes left in this 1 hour candle. Pull liquidity lower. Yeah, so we should definitely get to trying to bounce it here. I'm expecting It could bounce anywhere in here, but I was expecting it to get here at least. Let it go down there, huh? Okay. It's more than I would like. That's what I don't like. Scalping. I be up and down, up and down. Sometimes it's better than others though. But in these ranging markets, yeah. Supply here makes sense. Support here. Sorry, supply at these 19858s where this blue line is, and where we got this wick here. We bounced off of there previously this morning. We had support there, so now they're trying to break that. Oh, you know what? They could be filling up the gas to go higher. I don't know. They could be filling up the gas to go lower. Or they could be gathering buyers and sellers. Bears are still in control, pushing it down. Time is 11 o'clock. We opened up a new 1 hour candle. That was our first sign buyers are trying to step up. They should step up here or here. So I need to be trying to trail this pretty closely. Just get back in if I need to. Set this up. Here we go. The bounce there. See if we break this right away or if we bounce. Breaking it. What are we doing? Why is my stop not moving? Stop me out, send back up to get back in. I don't know why my stops keep getting stuck like that and they fade out like that to where what? Figure we should see some buyers here step up, but the conditions are extremely bearish, so we're still biased to the downside, right? Looking at this 1 hour candle. Here we go, bouncing. Ah, it's a big bounce. Big bounce. Okay, bears are still in control. This is a level for sure down here that was a level we created Thursday. We tested it again on Tuesday. And we could potentially be going there again now. Whether we bounce out of it or sell from it, that's what I want to find out. So I'm just taking these scalps on the way there. If we get there. That's the idea. Bulls are trying to step in here, which makes sense. Anywhere from the zone that I have drawn with these pink lines, anywhere from there to here, they can step up and send us higher. This is where we got that big candle opening candle overnight. It's like 200 points. Market open. It just ran up 200 points. It's crazy. So we're testing that low now, where all those buyers sit. So and now the not really letting us get below it, huh?
Check the mic and make sure it sound right, boys.
Buyers are stepping up. Trying to create a bullish divergence here, maybe. It's a nice bounce. Looks like it's about to stop me out. Where it be? Oops. I need to twist my hair. Ooh, the daily is bearish. Look at this daily. That big old wick. Look at that. So really, we continue lower and break this low. Maybe look out below. Maybe. So really, yeah, I can see why they would try to keep the price higher than that. Tuesday. Oh, look at that. Oh, stop me out. Sound like it stopped me out. Did it stop me out? Yep, it stopped me out. Sorry, down 21 bucks. I think so. I must have been up one. I was up one something. I was up 121. It's all right. Probably gonna be a little more aggressive with these scalps, even though it's not my. Why does it keep every 2 seconds? Look at that, see? Just touch those levels. I should have went short right there. It's extremely bad. I was gonna say they're trying to validate this area, but come on, stop me out. Then went, I'm taking it. This will be sending me on to. Because why would they just stop me out? Maybe no, that's my fault. I should have my stop open. They could be trapping bears. They could be trapping me. Okay, great. Down 40. Definitely bearish, but you can't expect some. I need to start opening my stops, bro. Whoa, that's support. That's a support. So those buyers are stepping in where these wicks are. Again, at yesterday's, it was at yesterday's open, 6 p.m. Yep, we open right there. Let's see. We open right to where my entry, right where my entry is. Bouncing. That, yeah, there's a bunch of buyers there. I'm gonna go ahead and cut this. Let me go back. And we go back. Buyers. Yep. Squeezing price higher. I haven't cut it yet because the MACD is still bearish, but my stop may not be wide enough for what the market is doing right now. Market is trying to go lower. Bears are pushing it down. They're still in control. MACD is still bearish. Looks like we got some more sellers coming in here. Cloud is bearish. But we're still in this critical zone here. So definitely a battle going on in here. I might stop back up. They like to play. They like to play, and quite frankly, my dear, gotta push it up. Got all these bulls down here. Why am I in this kind of trade? It's crazy, crazy trade. But they are fighting. Could have been a better area. Alright. Bears are still in control. It's looking like still got some sellers, but not pushing it down anywhere. Yeah, it's gonna bounce somewhere in here. Hopefully I can get out before what I should have took this forward here. They're gonna bounce somewhere. See these candles, how they're forming. It's going lower, but let's see. I've seen this before though. When it does this for a while, sometimes you get this huge bounce. I mean, conditions are bearish, but this is a critical zone where bulls are sitting. So yeah, higher. See that? Close higher. Wow. But I do need to use the ladies' room. Oh. That was a nice bearish move though, huh? Nice sell-off. Rejection of the initial balance high. Crossed at about 1048. What I have noticed though is that we have not went back to retest initial balance low. So how are they gonna play this out? Right? How will they manage this? Like right now, right then, that's what I was thinking. They're gonna go test it now. Where my stop is, which means I will get stopped out for sure. This thing. Still in this trade. Yeah, the buyers are. Gotta go test initial balance high. Excuse me. Cut this. See if we get a rejection. I mean, initial balance low. See if we get a rejection there. Back down. Look at those bulls. Have to play these ranges. See the bulls push this up. Bears push this down. Bulls pushing it back up. That's on the hourly candle. And that's why I'm looking at the hourly, trying to play these ranges, and so far the high and low, so by the 11. So we got a high about here, we got a low here. So far this is the hourly candle. I wanted us to do this at initial balance to get back in for short, but conditions are still bearish. Got a bullish divergence they're trying to create. Rejected off of yesterday's close. Let's level out so we can actually keep it. It's the overnight. Actually, I should put those values in the chart. on my mouse. Previous day closed. I don't even know how to keep drawing. And post market. Let's see. Open doesn't give me. Overnight open. Mess me up. Did I guess that? Overnight. See if we can make a new low and go to that zone. Yeah, we got a PLC. PLC is the point of control where the majority of contracts were traded for that time frame. Making you bullish, making you bearish. was just to give them a build at. Market's just hanging around here, killing the time. Not really doing nothing. It could be building buyers here or sellers. Accumulating buyers or sellers. Buyers here. I've seen this before a couple times. Flush and then bounce. Go down a little leg lower and then bounce. I'm not sure. Or they could just completely dump, which would be nice. Sell them off a little bit. Whoops. Excuse me. trying to go lower, but there's a PLC there. Got some support there. Let's see. Yep. Every time they sell it, it's just bouncing, getting bought right back up. Drama. Gonna make a new low a day. Nope. We bounced. We bounced out there. That was rejected. Yeah, that probably was. I gotta take these small scalps. Dang. Gave me like 40 something. I thought I was even able to lock it in, honestly, though. It bounced so fast. By the time I pushed the button, it wouldn't have gave me what I thought I was getting. Now might be the time to cut it. Second out. We failed to make lower lows. We failed to make a lower low on the day. Back D is curling up. I can't get on the right side of any trades. My locations are probably wrong too. I mean, they a bit more risk. The risky. This is where the bulls are. There's also supply here, so we're right in the middle of that. Time is 11:40. Uh-oh, bullish. Bulls are coming in. So the bulls were lining up. For the test that finally looks like that the initial balance low. MACD just flipped bullish. Where my stock is, I just can't get on the right side. I don't even want to flip bullish now, because by the time if I get in and we reject here, I was actually expecting them to build. Well, I kind of said I seen this before, right? I seen this before where we bounced. I got a double bottom here. 11, 12. 20, what, 24 minutes, 25 minutes. So how high could this send us? I really think it's power is bullish. They could be trapping the bulls here. Come down. Trap me here. Stop me out here. Come down. This is crazy. That's exactly why I want to start focusing on holding the trades for longer. But sorry, it's hard when we got these moves on the hourly, but yeah, because this would have been where to buy in on that hourly candle. So, okay, 16 minutes left in it. Let's see. We're gonna try to see what the next hourly candle does. It closes in 15 minutes. I'm gonna just let this trade do what it does. Don't stop me out. And then I'm gonna, I don't know what. So this is the hourly, and this is what. So confusing. We had a nice flush. Remember, I thought the hourly was, I was trying to see if we could, I got into it late, obviously. I was trying to see if we could take out these highs on this 8 to 9 hourly candle to give us a morning star, but we flushed. And this is so heavy. You know, I did take a couple scalps in there, and I was actually up $120. Now I'm down. Double that, more than double that. So thinking that we still were going to have some sellers come in and take out this level or bounce from this level, which was my initial short that I took in the morning. We got stopped out. We tested around that area, but we didn't quite get into that zone. And so I got trapped here thinking we were going to go lower. And like I need these candles to stack. You know what I mean? Like to get it, to give me a clear indication of what's going on. But if they're not, then I'm forced to either not take a trade and wait on that or scalp. So yeah, I think they're gonna push us back up. We're testing the initial balance low right now. Rejected off of it, but it looks like they want to push us back up into there. Like these bullish, like these bearish. What happened to my charts over here? Like the we'll see. Looks like we got a little initial balance, low rejection. If we push back up in there, then it is. If we push back into initial balance after breaking out of it lower, then that's gonna be a failed downside auction. If not, we reject off the lows and we get some continuation. Continuation meaning we get more selling. Ooh, nice sellers, nice. Yeah, that was good rejection. Who knows? Don't want to get excited. Nice bull trap that was. Let's see if this is really bullish. That was a pullback to go higher, or if we break lower. Fair rate decision coming soon in about 2 hours and 11 minutes. See if we can put in a new low for today. Let's see here. All right, breaking lower. go put in a new low. Let's trail this. Come on. I'm on my stop too soon, probably. I'm getting back in. We made a new low for today. Why are we here? Yeah, my wrist parameters are getting all jacked up here. Stop me out. I had like down 149 on the day. What are we doing? I need to wait. I need to wait until we pull back up here and then go short. Guys, I keep doing that. I thought. Whoa, look at that. Look at those buyers. Look at those buyers. What are they doing? They don't want us to get into this range here. I'm telling you, if we break it, it's look out below. Look at that. If we break that range, look out below. Well, we could come here. 19,585. This is the next level. 19,102 is where we bounce from to take us up into these levels. So that's why it's ping-ponging in here. Still bullish. Testing what was that, previous day's close? Yeah, previous day close. Rejection again. Bullish bearish. Bullish bearish. Let me go short from here. Let me try a short from here. Well, it doesn't help that my stop is right above initial balance low where it needs to go test. But we kind of got this. Yeah, I got to move up just a tiny bit. We kind of got this range going on, so I wonder if, you know, just fade to high. These buyers. We'll see. Nope, not working. The bulls are like here. They are here to stay, right? It said anything that's selling is being absorbed by these buyers. I think. Yeah, for the most part it is. I mean, just ranging here. Kind of better to sit on the sideline and wait to see what they're gonna do, honestly. But you know me. Gotta quit being scared that I'm gonna miss something. Buyers are still. Oh, look at the blue app. This is nice. Wait a minute. Where's the blue app? 3 minutes until this one hour candle close. Let's wait. See what it. Testing that initial balance low. They're gonna push us back in there. This range is so small that it could just push back in here and really find support at the low and rotate back to the highs. Probably won't go straight there like this this selling pressure we had here that took us straight from the highs back to the lows. Because obviously staircase up, elevator down is a model, right? It takes longer to go up than it does to come down. But this could, how much am I down? Like $300? $300. This could climb higher. $5 minute MACD is changing. 15 minutes. Still bearish. Oh, we got a double. Okay, I'm gonna take a stab at this long, guys. I could be so wrong. Wait, let me wait this minute and 50 seconds for this candle close, and let me see how this next one opens up. It's almost lunchtime, and I'm taking a real lunch today. I'm gonna go make me a nice BLT, some uncured turkey bacon. And it's gonna be so good. Gotta pull my air fryer out, actually. Okay, so 1 minute left. See how this. It's tricking us again. Okay, look at the 1 hour. On the 1 hour, we had a bullish hammer here. Right here. This 9 a.m. to 10 a.m. candle closed as a bullish hammer. The bulls try to take it up for the 10 a.m. to 1 o'clock candle, 10 a.m. to 11 a.m. candle. That's the one where we were trying to get to the highs of the 8 a.m. candle to see if we could complete a morning star pattern to send us higher, and it flushed. Now look here, we have another bullish hammer forming. So do we wait? Do we let it run up and look for a short? I think so. I mean, on the 1 hour candle, maybe that's why I'm getting on the wrong side. We have a high, lower high, high lows, lower lows. Just gotta be patient and try to catch the U right. Okay, the new. Oh no, this is. Oh, I think this. Hey, bulls, we got bulls, we got bulls. Might pull back a little bit. Let me see, doji. So let's see. Time is 12 o'clock. See, now it's lunchtime. Maybe we should take a break and I just feel like it's gonna do what the other candle did. I mean, we pools are in divergence. Where could it go? Here. This is resistance. This is supply. I don't want to go short. Sorry, I keep hitting the mic. Oh, we got PLC there. I expected a bigger flush than that. Well, let's find a support at the 9 EMA there. That was it, huh? Wolves are still in it. Both. Bullish. USD is there. Hold. But they want to go higher. Definitely pushing the resistance there. Trying to break that resistance. Push us into cloud is bearish. MACDs are above. I mean, MACD is bullish. Cloud is bearish. RSI is bullish. Sitting above the 21. And the 9 EM. Maybe I didn't have to sell. You sucker. Anyway, let me think about what's happening in this range. Kind of broke the range up, making you bullish. If we pull back into this range, I don't know. See, they're making me flip my buy because we sold off. Get the range. We kind of broke that range, but usually when we come back into a range after breaking it, that's because they were faking it. Like they were trapping people to the other side, whichever way it broke out. Like if price went sideways after a huge move up and it started going sideways and it broke down to the downside, that was $50. I should have took that. I'm running my mouth. $50. Broke down to the downside. It's so hard to be live and trade and talk. But broke to the downside and pulled back into that range to go sideways. Then most of the time they still want to continue another move up. They want to continue higher. And so here, but it just depends how how high, like how far would they break out of that range, up or down. Man, Jesus. All right, I just had $50 that I should have took, and let's just. The bulls are stepping right back in. Let's see, that was a nice little flush. I should have never got out of my first position from. I need a break. I'm not doing too well. It's May markets. It's mayhem markets. What is happening right now? Bears are here. Nope, where are bears? Let's see where bears and bulls are. Bears here, bulls here. Bulls, bears. Let's see these highs. I can't get a read on this guy. I'm trying to figure out, like, what are they? And it's because I keep being wrong or not getting out in time. There's a couple times where I was actually in a profitable trade, but I'm just not able to get out quick enough. See, that's why I flipped. It's nice and bullish, huh? 15-minute chart. It's Time is 12:10. There's definitely liquidity here. So it would be nice to get on the right side of that trade, right? And is this that trade? Or we just have to hold? I don't know. FOMC is coming, so. But there are definitely sellers here. Be nice to get in and trade for the retest of that level. This thing wants to go higher, but there's a resistance there. It'll break it sooner or later, right? You knock on the door so many times, eventually it'll open. I'm about to go start my bacon, my turkey bacon. I'll be right back. It's lunchtime, y'all. 12 o'clock. Take a break. Put some food in your belly. Wait, let me set a target just in case. Actually, I'm watching it from my phone. So BRB, I'm still here. Markets are live, and I am about to get some food. So enjoy your lunch if you're taking it. If not, enjoy the markets. BRB. Up $85 in this trade right now. I'm gonna actually move this. See if we can go target yesterday's lows. If it gets to the bottom of this range, then I'll be able to move my stop loss, which I hope it does. I hope it doesn't just bounce on me and take away what it's giving me. Got some support and resistance here at this line. So again, that's the overnight open. So I'm managing my trade from the phone. It's bouncing here. When you sit in these kind of trades and you notice the price swings, right, down 80, up 90, down 60, you know, that it's like, when you look at it, it's like, well, I could have just been scalping that, but it's hard to know when price is going to turn around. Besides having levels like this, initial balance high, obviously that's where initial balance lows where we rejected. Where we're bouncing off of right now is yesterday's open, or today's open, which opened at 6 p.m. So things like that make sense, but other than that, and market giveth and the market taketh away. Yeah, whatever. I'm going to finish making my lunch. Find it interesting that they're just keeping price lower. Like, we're just keeping price here, right below initial balance. It's like, keep price there. Don't go lower until the Fed meeting, right? Don't go lower into the meeting, or keep it there. Don't go higher into the meeting. I don't know. It's weird. Supposedly we have all this support here, but I mean, how long do we need to build support before we go? We've been here since 10:57. We entered into the zone at 10:57 a.m. It's 12:38. 2 hours later. It gave me like $102 here. I seen it right when I looked at it. It's just immediately went from 102 to 60, 66 or something like that. I couldn't even book it. I actually didn't want to book it. I just said, okay, I seen that if we, continue open lower and start trading below this level, then I will move my stop to that level. But obviously I didn't get a chance to. So here we are, $20 in profit, $22 in profit, 2021, hovering around there, and I'm about to go finish making my lunch. Now, of course, right when I say that, they break out, right? I was like, why is it taking so long? I wasn't able to book my profits, unfortunately. Down about 500 for today. We're going to go ahead and, it is what it is. This was a fresh account I started today. So about 1,500 left before, but it is what it is. All right, finish making my lunch. Might take a I'm not, can't really see it, but I'll be right back. I got my lunch. Look at this. I'm about to eat it. Nice BLT. I'm gonna turn my camera off here for a second and mute it so that you guys don't see me stuff in my face. Finally got a winning trade. It was like 175 in profit, but it stopped me out. I moved my stop up and it took me out of 2 different locations, so I'm not sure. Locked in about 100 and something there, but I'm gonna go ahead and enjoy my lunch. Looks like someone is supposed to start speaking at 1. Wait, are they speaking at 1? White House press briefing at 1, but FOMC is at 2, and the rate statement and the interest rate decision is at 2, and then FOMC press conference where Powell speaks is at 2:30. So let me go ahead and enjoy my lunch. Guys, that was the best lunch ever. Oh my goodness, that was the best BLT ever. So good. The music went off? Y'all was in here? Oh, sorry, guys. Wow, I suck. The music went off? Y'all was in here? Oh, sorry, guys. Is that it? My thing messed up. Uh-oh, what's happening? It's not. Oh, was that play? That was so good. Like, really, really good. Like, really, really good. With some romaine lettuce leaves on there. Come on. Why are you in my stopper? Well, looks like that 1 hour, that tail we got for the 1 hour. Who's that here? Who's that here? $11 a.m. Let's see. Played out. Finally got on the right side of one of them. That's what all that sideways action was. We were actually building buyers. But remember when I said I've seen this before and I need to see a big move after that? Just click a little longer. Nice trade, up $100 in this trade. We might be able to turn today around. It's 1 o'clock. We'll go ahead and move this stop up. To make sure we at least lock in 100. It would be nice to hit our target. 135, 145, 150, 170. Let's go. Let's go. Man, I haven't had one hit my target for a while actually. Alright. Down 150. Ooh, that feels good. I was down like 380 something. Or was it 480? 480? It was like 484. Yeah, it was like 480. So we got about 330 back. That's good. We'll take that. You want to know how I did it? I don't know. Nah, the way I did it was because I'm trading 2 contracts. First, I was trading ones. Oh, sorry. First, I was trading. It's tight in here. I wish I could show y'all what it looked like. I was trading ones. Look at that, right through VWAP. We're going to see, we got liquidity up there, and that's what I was thinking anyways, that we needed to come test this high again. So once I'm like, are they trying to push us up? Yeah, that's where we're going. So if we can get a pullback, I'll probably risk a little bit of money, like just have a tight stop and try to get in that entry. But I was trading ones, and sometimes, especially with the way my trading has been going, ones is taking me longer to lose money, and I mean lose a lot, and you know, for the amount to stack up. Like, actually not, because I'm risking $100 and $200, $100 on one, $200 for two, obviously, and that moves the stop up. But ones is taking a long time to like recover if I do get down, if I am down. So I started trading twos, and in these positions I've been adding. So I'm trading 2, and it's giving me something that I like, and I add 2 more. So with both of these trades, that made me that $300 back, which I took multiple trades, losing 100 and 200 to get it was up and down, but I was losing multiple trades to get to negative 480. But what was that, 2 or 3 got us back? Was it 2 or 3 trades? 2 trades, maybe 3, got us back 300 and something dollars. So the power of trading multiples, huh? And that's what I'm gonna try to do from now on. I mean, that's the way I originally trade anyway, but I don't know, I had to switch some things up when I went on defense, and just trying to get back into the groove of things and get used to trading live. I don't know what's going on with this thing. It won't go to another song. All right, have some little bit of rejection at the VWAP. Time is 1:17. Let's see if anyone's speaking. The Sense meeting concluded at 1 o'clock. So 42 minutes until Fed rate decision. What if they pushed it up? Oh, we'll see what the decision is. What if they push it up just in case? The market is not gonna like what's coming out, so they can have room to drop it, so that they wouldn't take it way down to these lows. I'd be thinking, right? Where they at? Because imagine the market not liking the news that comes out when we're here. We flush all the way down to here after we did all this to get back up here. But now imagine being up here, and we might flush to like here or something. Excuse me, or not. Don't listen to me. All right, we're in the middle, kind of there. Initial balance. Well, that's where VWAP sits. Is kind of in the middle there. More towards the middle. VWAP, we are rejecting off of it, but we're bouncing off of the 9 EMA. Testing that right now. Cloud flip from bearish to bullish. MACD is bullish. RSI is above neutral. This is on a 3-minute chart. Let's see. MACD on the 1 hour is still bearish, but bulls are starting to overcome that bearish pressure, returning from this darker red color here that you see at the bottom on this histogram of the MACD. We're going from that darker red to the lighter red, which just means less volume, less sellers there. Same with buyers. A lot of buyers are coming in here, and then there's less and less buyers, and then there's more buyers, less and less buyers. It's kind of nice. This histogram has been bullish for a long time. I guess that was an indicator of here that we were right here in there. So we had seller up in here. Sellers started to the volume started to decrease for the sellers, and we had buyers come in, and we were building buyers here. That makes sense. I did see that though. I mean, I didn't when I seen it, I was just thinking, because I think I was actually short. When I seen it, I was thinking, all right. I remember getting here, I was like, man, this thing has been yeah, because it gave me that $102 there, and then it was like right at 60, like went from 102 to like 66, and I didn't have time to get out, so then I got out up here somewhere. But I remember seeing that and thinking like, they're gonna bounce it, because I was in the kitchen. I'm like, they're gonna bounce it. Not that they're gonna bounce it, but I'm just like, bulls are here because of the amount of time that we spent bullish, and as the buyers were seeming to decrease here, look like sellers try to step in, where the histogram lines up with the chart. I seen that little green one coming. I think did I come to sit down at that point? And I was talking, yeah, I was telling you guys, but I seen that. And I was like, yep, this little U right here. Let's see, open it up. Nope, problem. Yeah, because usually we get these cycles. Like if you look, sometimes they're longer, but you just have the cycle, and then usually as the buyers decrease, then the sellers come in and it's these cycles. See, sellers decrease, buyers come in, it's a cycle. But when it does this and price is not going anywhere, yeah, they're accumulating buyers. Sellers gonna push it down. And then when we flip from this lighter green back to this darker green, and that histogram bar was higher than the previous one, that lets you know that volume is coming in. And as you can see, the volume, and it pushed it higher, pushed us higher, pushed price higher. Why do I feel like it's my music? Oh. Just that was up today. What's trying to talk about? Yeah, that was up. What is Dow rises with U.S.-China talks, Fed decision in focus. Yeah, let's see what he talks. Markets cheer U.S.-China talks, but it's going to be a slog. What? Oh. Google syncs on report. Apple plans to integrate AI search into Safari. Disney is actually a good options play sometimes. Good options if you trade options. Court, if you're here, you trade Disney. Netflix. Sometimes AutoZone. QQQ Spy, obviously. And see, we got this bearish divergence here, where we got those two white candles were sell off. Because obviously the volume is decreasing. So there's no volume here within these last two histogram bars for the MACD here on the bottom. But as you can see, price is they're still trying to push it up. So what I'm taking it as is the bulls have strength. I mean, there was a pullback, but we didn't get further, right, before the bulls watered up. So the bulls still have strength here. Man, this histogram has been bullish since 11:39. 124. 7:45. Oh, okay, you usually get about an hour. Oh. Why is that like that? What? What are you doing? I just moved it. Where is it at? I have no clue why I did that. Yeah. 1:25 is the time. 35 minutes until Fed rate decision. Look at that from yesterday. I was like, oh, somebody knows something. Look at this candle. Look at this big green candle. Opened up. Open here. What about 10, 11, 12 points lower or so? 11 or 12. And then 200 points higher. Overnight. That's crazy. That is wild. I wonder what came out last night. And I was looking at it. I had pulled my iPad out and I was like, wait, let me see something. I went to look at the charts and I seen this big candle there and I was like, tonight's open, but I didn't have it on the time yet. Like I was still getting it situated. And I'm like, is that tonight's open? And I'm like, oh no, that's that big candle from yesterday. Right? This one, this big move. And then I look back at it, I was like, that is not that move. That is way bigger than that. And so then I hovered over it and I'm like, oh my God. It's crazy. I must have opened it like right. I don't know. It was like right when it was happening because it was like wasn't there, and I did something real quick, and I looked back at it, and it was there, and I'm like, did that candle just happen? All right. Well. Just kind of sandwiched in between VWAP and the moving averages, the EMAs. Sitting on top of the 9 EMA right now. We're above the 108 EMA, above the 21 EMA. We're above the cloud, below VWAP. MACD is bullish, but it looks like it's giving up. Meaning the volume is decreasing. Still trying to take it higher. We'll see what they do here. Could just chop around here until the decision comes out. Cloud is bullish, sideways. I'm happy to be only down $150 compared to 480. That's a plus. Hi, Ancient Girl. How are you? I love that name. Okay. Music goes off every time I'm off of the screen. Sorry. Trying to... Spoke on the 4th? Oh, yeah, last one. What was last one? Was that Wednesday? Right. Even as traders, it's good to understand what's going on and in the world, obviously, even though we just really rely on the charts. Still good to know when news is coming out. It's very important to understand those things. Like when FOMC comes, NFP comes, the Fed rate cut decisions. Did I say FOMC? I think I did. Which those come on the same day. CPI, PPI. And NFP is always the first Friday of every month. Just so you're not caught in a trade, or you know, sometimes it can help you. Not really. You don't. maybe to some people, depending on their experience, like understand what to expect from the market at times, or why like we sold off, like when we were selling off, like why we're selling off, or why the market is running up, you know. Understanding like regular price action versus price action that is news driven. And news driven price action usually doesn't respect technicals the way the normal market would when it behaved. I don't know. I don't know what that was. Man, they really try to push price down on the daily. I still would not be surprised. We still have not. I would still not be surprised if we came back down here to touch that. To get back into that zone. I mean, what this was Thursday, but this was our attempt to test it yesterday, and so we bounced here again. Kind of took this level out, but we never went to go touch any. We didn't do a liquidity run there, so if that's what you want to call it. We didn't go for those buyers there, so they're still in the game. They bought in. They could have bought in here. Still in the game. We got a doji, a 30-minute candle, indecision. This next candle could very much well close bearish. There was probably a quick scalp that I was actually see if I can get my thing set up here. We added some jazz to the chart and to the thing, to the list, some jazz and a little bit of funk. But I don't know why it's only playing these hip hop songs and it's not even showing on my. I can't do this. I gotta. Turn it back to my spirit. I gotta Oh, you know what I could play? Auntie Dawn, if you're here. I could play some GOCC copyrighted. Let me see. Why is this my use? Why does it Well, this bounce here, we got a rejection there. Cloud is sideways bullish. Let's get that out of the way for a second. Because it looks, yeah, the bears definitely lined up. Like, looks like they're lining up. If they send us back here, we just flipped. Sure, there's a POC here. So we rejected off of VWAP. Back at the lows of initial balance. Those 19,858 we mentioned this morning, we bounced off of. We bounced off of those to go establish an initial balance high. We rotated off of the initial balance high, broke those 19,858s. We spent about an hour beneath the 19,858s. We created a ceiling there. The initial balance low was acting as the ceiling there. We created a floor here in the 19,797 areas. We pushed out of the 19,810s up to 19,926s, and that is where VWAP sits. And we rejected off of there, and now we are back at the 19,858 levels. Question is, will we bounce here again as we did earlier? Because it was support, it became resistance. Is it now going to become support again? We buy. We do have a support here at pricing we are currently trading at. About 1865, 19,865s. Testing the 858s. I don't know if I should take a quick stab here at this short. It's making me think it's going short, which means it could. Why don't I go on? Tons of bulls down here, obviously, because that is where price cannot get below in this white box here where we ranged at and accumulated buyers. The buyers sent us the VWAP, and we're now back kind of testing that area. And we're bouncing off of the PLC there, PLC. Resistance here, support here. That's interesting. Time is 1:39. Uh-oh. 21 minutes into this decision. Let's see. I need to find a source to cover this live. Listen. Services PMI. Sunday. Oh, 30-year mortgage rate came out this morning. All right, the bears are here still. Trying to push it down. Should have got in, huh? Because remember I said this candle could almost could potentially close bearish. And I was looking at a short because of that indecision right there on the 30-minute. Ooh, that forms. That is also an even star, but you know what? They've been making it look like it. This evening star, the morning star is gonna form, but it doesn't end up forming. $18. Still hanging here at above initial balance lows. So we're still within the initial balance range. Haven't broke to the downside yet. And we were not quite able to rotate all the way to the top. We rotated to the middle again. The middle is where VWAP sits. Markets. EU to hit Boeing, U.S. cars with tariffs if trade talks fail. Percent working on fair rules for the U.S. investment. Empty store shelves might be coming sooner than you think. How's that for a headline? It's not the first time I've seen that headline either. Guess I need to read it. What? Still sitting there above initial balance lows. We wait. I want to see what these markets do at this meeting when he starts talking. I don't know what. Let me see. It almost seems like things are priced in, right? I mean, well, this was Trump's talk. I'm like, what do we rally for? Do 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 do. Line 45, China's economy. China cuts key rate reserve ratio to aid economy hit by tariffs. We got a decision in 15 minutes. 15 minutes and counting down here. Oh, they want a back on this, didn't they? Broke slightly below the initial balance low there. Pushed us right back up into it. They're not trying to move now, are they? What are they doing? Bouncing there off of initial balance lows. Well, we're in that same candle where we broke down slightly out of it, pushed us right back up in it. And we are trading higher. A little. Hey. That's nice. Yeah. Hopefully this don't put you to sleep. I could loop this one. But a couple other ones. Sometimes you want some upbeat music, but sometimes you just want to chill, you know? And I just want to chill. I need to chill. Help keep me mellowed out. Not get so attached to these trades. Had some rough weeks. Or some rough trading weeks. Oh yeah, I probably gotta hear this again, guys. Sorry. Oh, hit my head. MACD is bearish. I want these bigger trades though. That's what I want. Well, let's see what could I have done differently. Right? Well, that was a flush. Recognize that. I think that was. What could I have done differently? Well, let's see where the bottom of this. What the bottom of this candle look like, right? See what the bottom of that 1 hour look like. Those are open. Alright, well. And the top of that, we know that was a flush. Price just kind of rolled over there. Moving averages were crossing. I seen that coming, but I didn't know it would happen that fast. So, not much on that one. This one here. First things first, I could have, even though that short I was in, it gave me like $102. If I would have just pushed exit. It wouldn't have gave me that. It may have gave me the 60 or 70 because it bounced pretty fast, maybe 80. So that's first things first. Second thing is, well, there's not much more I could have done here, huh? Because once I realized, like, once we broke into the initial balance range and we had this candle, we bounced off of the open, 6 p.m. open last night. Yeah, I knew it was time to flip it, so I flipped it. Where did I add? I added here or here. Moved my stop up, kept my stop tight, and I got out. I believe right here my target was, I wanted to target VWAP, but I knew it would probably pull back before then. I wasn't sure how high, but I believe I got out here around that 100-day moving average. Then I got back in. I think I had 2 on here. My stop was here, so it was pretty tight. It sat through a little drawdown, so it must have been, where did I add at? Could have been here, maybe here, maybe here. Stop was here. I'm not sure, but I know I sat through a little bit of drawdown, and then it went and hit my take profit. Look at that. Look at that break. We broke initial balance low, and guess where we're at? We are back. We're back into that range, sideways range we were in, that we entered into 10:57 this morning. We broke out at 12:39, 151. We enter back into that range. So one swing with this. So there's 1, 2 clear swings. By swings, I mean swing lowers. We swung low this morning when we rejected off of the initial balance high we put in. Then we just swung high when we broke out of this range. Yeah, we kind of just swung lower. Look at that. I wanted to short too. That momentum, I wanted that short. Cause look at the back thing. Why are the bears coming? See, that's what I was saying. Remember, I was like, oh, if they reject from here. I'm telling you, they're taking it up so that they can sell it some more. Holy cow. About to get in promo. Okay, we're bouncing off of yesterday. Are we going to test? Guys, are we finally going to test my range here? Right? That we entered into, was that Thursday? Tuesday. We tested it. We bounced there Thursday last week. Tested it Tuesday. We just bounced again off of the overnight open, 6 p.m. open, which is this light blue line you see here, and that's where obviously we were forming support at. Supported a little bit of resistance, more support obviously because it pushed us up out of there. The support was enough to push us up. I'm about to take a trade and keep my tight stop. Keep my stop tight. Keep my tight stop. Let me see. Well, that hourly and that half hour, look at that. If we get a close, 5 minutes for this candle to close. 5 minutes and 20 seconds, 5 minutes and 20 seconds before the rate decision. How ironic. Man, I want to get in a trade. I should have. When this candle opened and I was talking and I said, oh, this could potentially close bearish because of this indecision. And I said, if it does, we have a evening star. And then I said, well, it hasn't been giving it to us all day. The market has been making us think that it's going to form these morning stars and evening stars. Well, here we are. We closed down here. That's definitely an evening star, and I'm going short. And I might just open my stop. Got the fit. Look at that. I'm taking it. Just because. Fomc. No, but I really want it into this range. I want it into this range here. First, it bounces again off of yesterday. We fell below 6 p.m. open, bounced back above it. We're testing it again. See if it flushes it before this next 5 minutes. See if the trade plays out before then. That's when the rate decision comes out, and I probably shouldn't do the trade. It's trying to go lower, but the bulls are not letting it happen. I don't know. Yeah, that's the demand zone. Still demand there. There's still demand there. There's still buyers there. Trying to flip it, trying to flush it. Still demand there. Alright. Bears are trying to push it below there. See who has the power. Four minutes. Okay, it broke below our entry level. Bounced right back above it though. We don't need like $4 a green. So buyers are definitely here. They don't want to let it get below this level. Keeping price here, keeping it elevated here, but also keeping it like elevated below any lows down in this area. Even this zone, elevated above this zone where the pink lines are. This 30-minute zone created Thursday, but also keeping us lower than initial balance. So initial balance low. Looks like they might stop me out. Yeah, that's demand zone, demand. I want it to go south. That's, oh, stop me out. Nice stop out. That's quick. Let's see. Alright, I probably should have risked less. Back down 252. I should have risked less on that because it was a kind of FOMO. Not really. It was like a momentum play. Excuse me, like I did earlier. It did not work in the zone. That's the second time it didn't work in the zone. So I probably, third time's a charm, huh? Probably won't do that again. Where was it? I think here. I was thinking the same thing, that we're going to continue this momentum downward and not work. And out here, since this flushed us, this is some good momentum here. Since this flushed us down, I thought maybe we can get some continuation this time to break down to the zone. To our pink zone there, but obviously not. The buyers are still in, as we can see by this wick, and them holding price above our yesterday's open, which is 6 p.m. Oh yeah. I mean, I'm not scared to go short again. 32 seconds. Let's see what happens. That trade didn't work in our favor. 24 seconds. $11 seconds. 11 seconds. Oh, look at that. Well, numbers came out. The market, woo, you see that? You see how it spiked up like that? That's why I needed to be out of that trade. Now will they take it lower? Taking it. Don't stop. Stop me. That was a gamble. That was a gamble, I'm not gonna lie. I wanted to go to this level so bad. I'm so biased. I know it's going there, but they're just like playing. Maybe it's not. Where is it? Oh, it came out prior was 4.5%. Forecast was 4.5%, and it came out 4.5%. So it came out as expected. The market is so far interpreting that as good news, I guess. But you know what they say, sometimes good news is bad news and bad news is good news. So now we just wait for the conference. I wanted that to do what it's doing now. Still, I'm about to go short here. Heck no. You know, they got me scared though, but not scared, but like I'm nervous to. So many buyers, but the price isn't going anywhere. So many sellers, and the price isn't going anywhere. Can't really trust this right now. Usually it spikes up or spikes down, or sometimes both. But this time it spiked up now. Well, it does that sometimes. But to get a doji like this and not, you know, close bullish or close bearish. Indecisive, huh? Because we got the meeting coming out. Well, it did push us up out of this range, so let's see. I want to take a stab at a short here because of the previous candle, the previous 1 hour candle, but took that quick trade. It's probably gonna just, that's what I thought I would do, retrace this whole move here, but this is tell you what, this game is dirty today. They playing how they always, but because of these, well, the last 1 hour candle was cool, but the 1 hour is green now. May flip red and then back green or not. Took that trade real quick, put me down. I'm down 297. For 150, it was now like 320 something. Oh, yeah. Then took a quick trade to get some of that back. Just 1 hour candle is looking real. Let's see what it does. All right. In the money, $80 in the money, 79. Retracing that FOMC push. I mean, that rate decision push. So what does that mean? They're not cutting rates? They're Or is that a... I don't figure out how to interpret that, huh? There was like a 97%, 92% chance that they wouldn't anyway or something. Nice. Come on, go to my level now, please. Now. This time. I'm waiting all day for this. There we go. There we go. There we go. Let's get it. Finally. Look where we at. Oh, I'm loving it. Look where we at. Oh, I should have added. Let me add 2 more. Wait, let me just real quickly add 2 more. Boom. Let's go. 300 in the trade. 329, 323. I'll take that. 339. Let's go. Right to my zone. We green on the day. We ain't even down no more. We only up $33, but we green on the day, baby. Let's get it. That's what I wanted. I don't even care about the trade. It's fine. Finally, they went to my level. Ooh, they just broke through my level. Wow. I did not have to get... Oh, this is what I wanted to see. Now look at the daily. Now it's happened. Now we rolled over. The daily, we had like a hammer. We had an inverted hammer there. And I'm like, this is so bullish. It finally... Oh, no. I need to get in. This is that empty pocket, guys. They took off. Gotta get these levels together. I'm definitely about to I should have had these levels marked already. Here we go. Here we go. We get there. We get here. Remember I said if they, what I be thinking is that they pump it up so that when the news comes out they can have room to go lower. I don't know, just little small nuance things I've noticed. Okay, pulling back up into the range, rejected out of it. We didn't quite make it back in there. I do want to take... They may spend some time around here. But I want to look to get into a short back down to these levels, 19,589s. We are at 19,738s. This is so bearish. I want to get in. If it were to go down, oh, that was it. That was my entry when it pulled back up. I thought they was going. Look at the MACD. Look at the, okay, the RSI. Yikes! It's going without us. Come on. Come on. What are they doing? 7, 6, 5 seconds. I'm getting in at the next candle. Just hopefully it opens and pops up a little bit and not flushes like it's doing. I can't help myself. I ain't even come on now. Is that 100? Oh, I risked 100. I meant to risk more. It's about to stop me. That was a quick stop out. Well, back down negative one today. Oh my God, $78. It's alright. We'll catch it back with this. That's what I thought they were gonna do. I thought they were gonna spend some time here, but I need to open my stop up. I thought I heard it open. Open it. Man, I knew they was coming to that. Just flush it. Okay, maybe this will give me a second to see what we're doing next. Support there. Whoa. Oh, sorry. Yikes, that probably was loud. I hit the mic, sorry. Alright, let them, this is the pullback I needed. Being impatient. We're not getting any, back up into that range. It definitely needs to come test this range again to make sure it wants to continue lower. Yeah, I keep messing my day up, y'all. Get back green, and then I'm back where taking my trades too close back to back. I'm too excited. All right, let's see what they do. Anyway, see what they do at this range here, because that's where I thought buyers would step in at, but we just flush right below it. Time is 2:11. Oh my goodness. Maybe I should. Okay, we got a 1 minute bullish divergence coming in. Somebody yelling? Looks like they're gonna try to bounce here. Got these buyers here. Yep. Like what we did earlier, we seen those 3 wicks. Where is it? It could break it, but where is it? Trying to focus on my trade there. Folks over there yelling. I don't know. This could be a trap. I don't want to risk that much. Yeah, they gotta spend some time here. Got some support down here. Support came in. Took us all day to get down to that level that I took us all freaking day. Let's see, first attempt. When did we finally get there? 2:06. Took us till 2 o'clock. What are they doing? Sorry, y'all. I'm trying to make sure. You know, the folks ain't gonna be doing that crazy. Why I keep pausing the music? Sorry. They're trying to push it down, they keep pushing it up. Nope. Maybe after the market close. All right, we are breaking down. They want to push it down. Heavy. This is heavy. Try to just lock in some game. Down $42. Let's get it back. Still want to go short here. This 1 hour. 216. Time is 216. Where are they trying to take it? Are they trying to take it down for a reaction? Hanging out today. Yeah, I'm gonna turn on. Wait, let me get it ready. I'm gonna turn this music off and tune in to what for a couple minutes, maybe 15 minutes or so, maybe a little more, to see what Powell says. Cover that live so we can see what the market does, how it reacts in real time. Got some support here. I'm glad I took my gains when I could, because all day I have been like struggling to take what the market was giving me. Bearish on it. $2:18, 12 minutes until this man speaks about whatever he gonna speak about. The economy. I can't. MACD is bearish. Kind of messed that trade up chasing. Trying to be greedy. I mean, when after I had that trade here, put me green for the day, should just left it alone. Instead of just, thinking I'm gonna miss out on something. I didn't want to miss out on it because I've been waiting all day for that move. Got that move. I didn't get in. Where did I get in at? Maybe on this candle? Somewhere. It's a nice trade. Was able to catch it. Getting in at here would have been better. So let's see if we can see how much more patient we can be, huh? Catch something. Okay, bulls are in. Bulls are coming in. Starting to buy it up here. Are they trapping the bears? All right, we're back into that zone. Seeing if we can turn that zone into resistance. It was support twice. We broke that support. Now is it going to be resistance? Are we going to reject out of it or push through it? We push through it. Actually, since we broke the zone, I can kind of, I'll get rid of it, but I'll wait until the day is over. We tested it twice, and then we flushed right through that zone. So price may or may not respect it anymore, but I don't necessarily need it, especially if we bounce here and we don't come back. The reason why I had that zone was because we tested it twice already, so I wanted to see what we do like the third time. Oh my god, I think my neighbor went too early. But like here, where this blue line is, we haven't tested any of these levels. And see where that peak, that I mean, if we get down there, but we haven't tested that. We haven't retested that. Yikes, that's far, right? We got a gap down here, way down here. That's in the 1800s, so whoa. We don't want to be back down there. That was correction and recession territory. Correction was 10%. Recession is around 30. Or bear market, I'm sorry, is 30. Anything more than that. Around the 30s, anything more than that, you know, you talk about the R word. You know what? We don't want to get there again. We don't want to be there. Oh, that's... I think they calmed down now. That's never happened before. Really extremely quiet. All right, bulls are stepping in here again, trying to push it up. Trying to push up. We're in that 30-minute range, the 30-minute zone. We gotta go back. I need to go back. 2:26. Jerome Powell speaks in 4 minutes. We'll put it on in like at like 2:29. We can listen in. Definitely bullish right now. Bullish, bullish, bullish. $2.28. Let's get this ready. I don't want to put it on the screen. Well, actually could put it here. No, it won't work. Wait, will it work? It will, but I won't be able to see.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite heightened uncertainty, the economy is still in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments.
Powell speaking.
Pardon me. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were likely driven by businesses bringing
Uh-oh. No way.
in imports ahead of potential tariffs. This unusual swing complicated GDP measurement last quarter.
Wow.
Private domestic final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 3% rate in the first quarter, the same as last year's pace. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a sharp decline in sentiment and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged 155,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year.
We covered that.
Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Total PCE prices rose 2.3% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up, as reflected in both market and survey-based measures. Survey respondents, including consumers, businesses, and professional forecasters, point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of the balance sheet. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. The tariff increases announced so far have been significantly larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain. As economic conditions evolve, we'll continue to determine the appropriate stance of monetary policy based on the incoming data, the outlook, and the balance of risks. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we'll balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on inflation dynamics and the implications for our monetary policy strategy. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference next week. Throughout this process, we're open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals.
Market is
Thank you.
going up.
I look forward to your questions.
Steve Leachman, CNBC.
Market
Thank
is
you, Mr. Chairman,
bullish.
for taking my question. A lot has happened since the last meeting. There's been tariffs put on, tariffs taken off, and meanwhile, there's a bill advancing in Congress. And I just wonder if I could press you on the last part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Here it comes.
Well, so as we noted in our statement, post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March. So that's what we can say. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out. And also when they do settle out, what will be the implications for the economy, for growth, and for employment. I think it's too early to know that. So, I mean, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. I think, look where we are today. We have an economy that, if you look through, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid. Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape. And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data. The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve and become clearer in terms of what should be the monetary policy response.
Around 2021. There are some who argue that the current situation has notable differences. Energy costs are down. Housing imbalances look nothing like they did 4 years ago. Labor demand appears to be gradually cooling, with wage growth running below 4%. What do you see right now that could nourish higher inflation beyond a rise in goods prices this year?
I think the underlying inflation picture is good. It's what you see, which is inflation now running a bit above 2%. And we've had
Was it still in?
basically decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is moving along well. But there's just so much that we don't know. I think, and we're in a good position to wait and see is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And we'll see. The administration is entering into negotiations with many countries over tariffs. We'll know more with each week and month that goes by where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take, But for now, it does seem like it's a fairly clear decision for us to wait and see and watch.
So when you say that you don't need to be in a hurry, does that mean that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
You know, as I said, we are comfortable with our policy stance. We think we're in the right place to wait and see how things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient. And you know, when things develop, of course, we have a record of we can move quickly when that's appropriate. But we think right now the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out, and then we'll be able to make a better assessment of what the appropriate path for monetary policy is. So we're not in that place, and you know, as that develops, and I can't really give you a time frame on that.
Okay.
Janelle Marte with Bloomberg. So many economists have been pricing in higher odds of a recession, and several are noting that it is more difficult for the Fed to cut rates preemptively given the higher risks for higher inflation. So given the outlook, do you still see a path for a soft landing, and what does that look like?
Well, let me say, I mean, so let's look back and see where we are. So to go through 2024 up to the day, we've had you know, unemployment in the low 4s for more than a year. We've had inflation coming down now in the mid to low 2s. We've had an economy growing at 2.5%. So that is the economy as we see it now. What looks likely, given the scope and scale of the tariffs, is that we will see certainly the risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately put in place at those levels, which we don't know, then we won't see further progress toward our goals. But we might see a delay in that. I think in our thinking, we would never do anything but keep achieving those goals. But we would, at least for the next, let's say, year, we would not be making progress toward those goals. Again, if that's the way the tariffs shake out. The thing is, we don't know that. There's so much uncertainty about the scale, scope, timing, and persistence of the tariffs. So that's that. In terms of preemption, you know, I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019, we did cut 3 times. But the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been above target for 4 years. It's not so far above target now. And we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've also got you know, forecasts of weakening in the economy, and some have recession forecasts. We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is. But in any case, it's not a situation where we can be preemptive because we actually don't know what the right response to the data will be until we see more data.
Colby Smith with the New York Times. How much weakness does the committee need to see, though, in the labor market and the economy more broadly to lower interest rates again? Is it about a certain increase in the unemployment rate over a period of time, or perhaps a certain number of negative monthly job reports? I mean, how are you making that assessment?
You know, so first of all, we don't see that yet, right? We have 4.2% unemployment, good participation, wages behaving very well, participation, I mentioned it at a good level. So, you know, with the labor market, we would look at the totality of the data. We'd look at the level of the unemployment rate. We'd look at the speed with which it's changing. We would look at the whole huge array of labor market data to get a sense of whether conditions are really deteriorating or not. And at the same time, we'd be looking at the other side of the mandate. We could be in a position of having to balance those two things, which is, of course, a very a difficult balancing judgment that we'd have to make.
On that point about balancing, I mean, you've mentioned that the committee would consider how far the economy is from each goal and the time it would take to kind of get back to that point. But what does that mean in practice? I mean, how much of that assessment will be rooted in a forecast versus data dependence?
It would be a combination of the two. I mean, let's just say this would be a complicated and challenging judgment that we would have to make. We're not in this situation, but the situation is if the two goals are in tension. So let's say that unemployment is moving up in an uncomfortable way, and so is inflation. Not the situation we're in, hypothetically, but we would look at how far they are from the goals, how far they're expected to be from the goals, what's the expected time to get back to their goals. We look at all those things and make a difficult judgment, and that's in our framework. It's always been in our thinking. You know, we haven't faced that question in a very long time, so again, difficult judgment to make, and not one that we face today. And we may never face it, but you know, we have to be keeping it in our thinking now.
Thank you. Edward Lawrence with Fox Business. So we had the CPI report that came out that showed month over month the first decrease in inflation in about 3 years. The jobs report, you said, solid, that we saw. At the same time, we have those new tariffs that we're living under. So given this, should the Federal Reserve be cutting rates at all this year?
You know, it's going to depend. I think you have to just take a step back and realize this is why we are where we are. Is, you know, we're going to need to see how this evolves. There are cases in which it would be appropriate for us to cut rates this year. There are cases in which it wouldn't. And we just don't know until we know more about how this is going to settle out and what the economic implications are for employment, for inflation. I couldn't confidently say that I know what the appropriate path will be.
So following on that, just
so
then how does President Trump calling on you personally, as well as the Federal Reserve, to make rate cuts affect your decision today and affect your job difficulty?
Doesn't affect our doing our job at all. So you know, we're always going to do the same thing, which is we're going to use our tools to foster maximum employment and price stability for the benefit of the American people. We're always going to consider only the economic data, the outlook, the balance of risks, and that's it. That's all we're going to consider. So it really doesn't affect either our job or the way we do it.
Back in the 30-minute range zone from Thursday.
Hi, Howard Schneider with Reuters, and thanks for the time. I'm wondering, I mean, given the complexity about the first quarter GDP and what lies ahead, I'm just wondering what your intuition tells you about the underlying direction of the economy right now. Many of your colleagues have said they feel growth is slowing. If so, do you have any sense of by how much, to what degree the slowdown may be? What does your gut tell you about how things are evolving out there?
My gut tells me that uncertainty about the path of the economy is extremely elevated, and that the downside risks have increased. The risk is, as we pointed out in our statement, the risks of higher unemployment and higher inflation have risen, but they haven't materialized yet. They really have. They're not in the data yet. So that tells me more than by intuition, because I think it's obvious actually that the right thing for us to do is we're in a good place. Our policy's in a very good place, and the right thing to do is await further clarity. And I you know, there's usually things clarify and the appropriate direction becomes clear. That's what usually happens. Right now, it's very hard to say what that would be. In the meantime, the economy is doing fine. Our policy isn't, you know, it's not highly restrictive. It's somewhat restrictive. It's 100 basis points less restrictive than it was in, you know, last summer. So we think it's in a good place, and we think the appropriate thing is for us to wait and see and get more clarity about the direction of the economy.
Well, let me press you on this idea of the economy being fine right now, because reading the Beige Book very closely the last time around, there was a lot of, you know, negative stuff, negative sentiment that was in there. And I know that everybody's looking at soft data right now. You mentioned it yourself that the sentiment's sour. But the Beige Book was talking about, you know, the beginnings of layoffs in some industries, prices rising in some places, and an awful lot of investment decisions being pushed to the sideline. Doesn't that point to a slowdown?
It may well. It just hasn't shown up yet. And you know, we all look at all these sentiment and read many individual comments just to get a better feel. And you know, businesses and households very broadly are concerned and you know, postponing economic decisions of various kinds. And yes, if that continues and nothing happens to sort of alleviate those concerns, then you would expect that to begin to show up in economic data. It wouldn't maybe show up overnight, but it would show up over weeks and months. And that may be what happens, but it hasn't happened yet. And also there are things that can happen that will change that narrative. I mean, they haven't happened, but it's possible to imagine things that, but in the meantime, yes, we're watching it extremely carefully like everyone is, but don't see really much evidence of it in actual economic data yet. And by the way, consumers keep spending, credit card spending. It's, you know, it's still a healthy economy, albeit one that is shrouded in some very downbeat sentiment on the part of people and businesses.
Mm-hmm.
Michael McKee from Bloomberg Radio and Television. The Fed's been criticized recently by a former governor for what he calls mission creep. You take on more problems, use more tools, and then end up building tools to deal with the fallout of those tools, which then makes it a given that you will act more aggressively in the future. Is that a fair critique, and is that something you would be looking at in your framework review?
Sorry, say the critique again.
That the Fed has been involved in mission creep, gets involved in using too many new tools to deal with problems.
Try to get back positive
on
a day, down 42 cents.
Is that
almost
something
green.
That the critique was
Couldn't get the
based
whole
around
50
the
by the
fact
time I
that
pushed
you
the
did
button.
QE and QE and QE and went beyond the narrow confines of your mandate?
So, well, I mean, there are a couple. That's not really beyond the confines of our mandate. Look, I would say this: we did things. Essentially, we're on an emergency footing for a couple of years in the pandemic, and it's very fair and very welcome for people to look back over what we did and say, "Hey, you could have done this better and different." And one thing we hear a lot is we could have explained QE a little better. We did think we were explaining it in real time. I completely accept the thought that we could have explained it better. There's a lot of thinking that we went on too long with QE. I can tell you that the reason we did was we were concerned that we didn't want a sharp tightening in financial conditions at a time when we thought the economy was still vulnerable. And so we did hold on for a long time to QE, and we of course tapered and everything. And then we immediately went into QT, and we're down a couple of trillion. But I get we certainly, with the benefit of hindsight, could have tapered earlier or faster. That's absolutely right. But this is all very welcome. It's we knew doing this in real time that we weren't going to get it perfect, and those kind of after action kind of looks are essential, and we're doing the same thing in our review. So on some issues.
The other part of that critique is that you've taken on topics that are outside of the mandate, such as climate change and trying to ensure that certain groups are benefited by your economic policies in terms of employment, etc.
He's trying to be a smart
So, okay, on climate, you've heard me say over and over again that we will not be climate policymakers, and that our role on climate is a very, very narrow one. And I think that's what we've done. We've done really very little on climate. You can say that that little bit that we've done was too much, but I wouldn't want to give any impression that we've taken climate and it's something that we're spending a lot of time and energy on. We're not. We have very, very narrow things. We did one guidance for the banks, and then we did a one-time stress analysis, climate stress analysis, and that's it. And we dropped that to the Network for Green Financial System. So we didn't do much on climate, but I do think, and I've said this publicly several times, I think it's a real danger for us to try to take on a mandate like that, which is very narrow application to our work. And the risk is if you go for things that are really not in your mandate, then why are you independent? And I think that's a very fair question. I do think we've done a whole lot less on climate than some people seem to think we did. Anyway, that's what.
Should you have taken on the question of bringing unemployment rates down?
We didn't do that. What we said was that we never targeted any unemployment rate for individual racial or demographic.
Market
What we
is
said was that
bullish.
maximum employment was a broad
Buyers are
inclusive
stepping in.
goal. And I think what we meant by that was we're going to consider the totality of the country.
To just push us out of that 30-minute range
our maximum employment goal.
from
Of course,
Thursday.
we're never going to target any individual group with that, but I think some people, wanted to hear it that way. But that's not at all what
Whatever
we
it
meant.
was, seems like they want to
but,
send this thing higher.
So that's just not a correct reading of our. But I can see how maybe people found that confusing, and we have to take that into consideration.
Hi, Chair Powell. Thanks for taking our questions today. I'm Jolene Kim with CBS News. You've said wait and see, and the economy is doing fine today, but the impact of tariffs are already showing up at the ports. Businesses big and small are telling us that they feel it, and most importantly, consumers say they feel it, that the challenges are here, and there's no waiting and seeing. For Main Street, what is the breaking point? What would have to happen to prompt a rate cut specifically?
Well, so we really don't see in the data yet big economic effects. We see sentiment, there are concerns that higher prices may be coming or things like that. So people they're worried now about inflation. They're worried about a shock from the tariffs, but they really haven't. That shock hasn't hit yet. Okay, so we're going to be looking at the not just the sentiment data, but also the real economic data as we assess what it is we should do. And remember, there will be two effects. One of them would be weakening economic activity, which translates into higher unemployment, and the other would be potentially higher inflation. Again, to say it again, the timing, the scope, the scale, and the persistence of those effects are very, very uncertain. So it's not at all clear what the appropriate response for monetary policy is at this time. And and by the way, our policy is in a good place, so we think we can wait and move when it is clear what the right thing to do is. Really not at all clear what it is we should do. So people are feeling stress and concern, but unemployment hasn't gone up. Job creation is fine. Wages are in good shape. People are not layoffs, or people are not getting laid off at high levels. Initial claims for unemployment are not increasing, in any kind of impressive way. So the economy itself is still, in solid shape.
Just a quick follow-up. President Trump now says he does not plan to remove you as chair. When you heard that, what did you think?
I don't have anything more for you on that. I've pretty much covered that issue. Thank you.
Right.
Hi, thank you. Chris Rugaber, Associated Press. Well, I just wanted to follow up. Earlier, it sounded like you said it was unclear how the Fed, what kind of interest rate decisions you will make later this year. So does that, in March, there was guidance that 2 cuts might happen, 2 cuts were penciled in for this year. Is that now, that guidance from the last press conference, has that been overtaken by events at this point?
We don't do a summary of economic projections at every meeting, as you know. We do it every other meeting, and so this was the meeting when we didn't do it. And we don't also kind of poll people, so I really wouldn't want to try to make a specific projection for where we are relative to that. We will, in 6 weeks, we have the June meeting, and you'll have another SEP. I'm not going to hazard a guess here today as to what it would be. Again, what I would say is that we think our policy rate is in a good place. We think it leaves us well positioned to respond in a timely way to potential developments. That's where we are. And that, depending on the way things play out, that could include rate cuts. It could include us holding where we are. We just are going to need to see, how things play out before we make those decisions.
Great. And just to follow up on that, I mean, when you address the issue of how the Fed would handle both rising unemployment and rising inflation, how are you thinking about the fact that addressing one could exacerbate the other? So a rate cut to reduce unemployment could worsen inflation and vice versa. How do you handle those
Well,
challenges?
you just captured this is the issue with the two goals being in tension. It's a very challenging question. Now, there can be a case in which one goal is very far, one variable is very, very far from its goal, much farther than the other. And if so, you concentrate on that one. And frankly, that was the case. Well, it wasn't a case where they were really in tension, but if you go back to 2022, it was very clear that we needed to focus on inflation. The labor market was also super tight, so it wasn't really a trade-off. If I think you know what our framework document says. It says we'll look at how far each variable is from its goal, and also we'll factor in the time it would take to get there. So, that's going to be potentially a very difficult judgment, but the data could break in a way that it's not. I just don't think we know that. The data could easily favor one or the other, and right now there's no need to make a choice, and no real basis for doing so.
Hi, Victoria Guido with Politico. I wanted to ask, Congress is currently debating spending cuts alongside extending the tax cuts. And I know you've talked many times about how the path of the debt is unsustainable, but given that we're also talking right now about the economy slowing, potentially even recession, I was just wondering, is there a danger that spending cuts now could slow growth a lot more?
We don't give Congress fiscal advice. We take what they do as a given, and we put it in our models and in our assessment of the economy. So I wouldn't want to speculate on that. I mean, I think we do know that the debt is on an unsustainable level, on an unsustainable path, not at an unsustainable level, but an unsustainable path. And it's on Congress to figure out how to get us back on a sustainable path. And it's not up to us to give them advice.
Would you think that they should take macroeconomic conditions into account as they look at this?
I think they don't need my advice and our advice on how to do fiscal policy any more than we need their advice on monetary policy.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. In your Jackson Hole comments
just tuning in here because
you said you would not welcome further cooling in labor market conditions. The unemployment rate then was 4.2%, which is what it is now. Many forecasters now predict a higher jobless rate. How has your tolerance for weakening labor market conditions changed compared to a year ago?
So it was quite a different situation. What was happening last year is that over the space of 6, 8, 7 months, the unemployment rate went up by almost a full percentage point. And it was click, 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 click each month. And everywhere people were talking about downside risk to the labor market. At the same time, payroll job numbers were getting softer and softer. So there was a really obvious concern about downside risk to the labor market. And so at Jackson Hole and then in September, we wanted to address that forthrightly. We wanted to show that we were there we'd been there for inflation for a couple of years, and we wanted to show also that we were there for the labor market. And it was important that we send that signal. Fortunately, since then, the labor market has really, and the unemployment rate have really been moving sideways at a level that is, well in the range of mainstream estimates of maximum employment. So that concern has gotten a lot less. So, you're at 4.2% unemployment. I think we were in a very different situation. Now we have a situation where, the risks to higher inflation and higher unemployment have both gone up, as we noted in our statement, and we've got to monitor both of those. We actually have a potential situation where there may be a trade-off or tension between the two, potentially. We don't have it yet, and we may not have it, but that's what we have, and that's why I think it's a very different situation.
I guess I want to follow up by asking how much of a rise in the jobless rate you could tolerate.
I can't give you I'm not going to try to give you a specific number. I'll just say we have to now be looking at both variables and which of them is demanding. If one of them is demanding our focus more than the other, that would tell us what to do with policy. If they're more or less, equally distant and equally or not distant, then we don't have to make that assessment. The assessment is you wait. So I'm not going to try to be really specific about what we need to see in terms of a number, but if we did see, significant deterioration in the labor market, of course, that's one of our two variables, and we would look to be able to support that. You'd hope that it wasn't also coming at a time when inflation was getting very bad. And again, we're speculating here. We don't know this. We don't know any of these things. It's very hypothetical. We're just going to have to wait and see how it plays out. Thanks.
Claire Jones, Financial Times. In terms of getting some clarity, we've got some talks at the weekend in Geneva between the US and China. A lot of economists are attaching an awful lot of importance to what we hear from those talks. How much importance are you attaching to them in terms of judging what will happen to the US economy going forward? And just in a similar vein, some economists are saying it's days, not weeks, that we have until we start to put the US economy at risk of seeing the sort of pandemic era shortages and higher prices if we don't kind of soothe relations between the US and China. So it'd be good to have your view on that too.
So, these are not talks that we're in any way involved in, so I really can't comment directly on them. So, but what I will say is this, we had, coming out of the March meeting, the public generally had an assessment of where tariffs were going, and then April 2 happened, and it was really substantially larger than anticipated in the forecasts that I had seen and in our forecasts. So, and now we have we're in a new phase where it seems to be we're entering a new phase where the administration is beginning talks with a number of our important trading partners, and that has the potential to change the picture materially or not. And so I think it's going to be very important how that shakes out. But we simply have to wait and see how it works out. It certainly could change the picture, and we're mindful of not trying to make conclusive judgments about what will happen at a time when the facts are changing.
And just on the fall in shipping volumes from China over these tensions, I mean, do you share that concern that we could start seeing goods shortages and higher prices in the coming weeks if this isn't resolved very quickly?
I don't want to get we shouldn't be involved even verbally in questions about the timing of these things. Yes, of course we follow all that data. We see the shipping data, we see all that, but ultimately this is for the administration to do. This is their mandate, not ours. And I know as you can see, they're again beginning to have talks with many nations, and that has the potential to change the picture materially. So we'll just have to wait and see.
Kosuke Takami with Nikkei. Thank you for doing this. The volume of imported goods increased significantly in the first quarter. Do you think that this situation could cause a delay in the impact of tariff on inflation? And does this mean that it will take longer time to reduce uncertainty?
The decision we made today? Which decision?
So the future decision. So the volume of the imported goods has increased significantly. So the impact on the imported inflation may delay. So what is the impact to your future decision?
Okay, so I mean, I think we think that there was a big spike in imports, right? Very big, historically large, really, and to beat tariffs. And now that should actually reverse, so that it's the difference between it's exports minus imports. So and imports were huge, and so that it conveyed a very negative contribution to U.S. GDP, annualized GDP in the first quarter, as we all know. So that could, in the second quarter, be reversed, so that we have an unusually large contribution to usually positive. That's very likely as imports drop sharply. You could also have, very likely you'll have restatements of the first quarter. It'll turn out that consumer spending was higher. It'll turn out that inventories were higher, and so you'll see those data revised up. it may actually go into the third quarter too. And so I think this whole process is going to a little bit make it harder to make a clean assessment of U.S. demand. I mentioned
range from this morning.
Private domestic final purchases, which doesn't have inventories government or inventories government. Anyway, it's a cleaner read on private demand, but that too probably was flattered a little bit by by strong demand for imports to beat tariffs. So that might overstate. It's a really good reading, 3% PDFP in the first quarter. That might actually overstate. So it's not really going to. I don't think it's going to affect our decisions. I will just say though that it's a little confusing, and it's probably less confusing to us than it would be to the general public as we try to explain this. It's complicated, and GDP is sending a signal, PDFP is sending a signal. It's a little bit confusing, but I think we understand what's going on. It's not really going to change things for us.
Courtney Brown from Axios. I guess, we talked about some of the indications of potential layoffs, price hikes, an economic slowdown, all being evident in the soft data. I'm curious why the Fed needs to wait for that to translate into hard data to, make any type of monetary policy decision, especially if the hard data is not as timely or might be warped by tariff-related effects. Are you worried that the soft data might be some sort of false warning?
No, I mean look at the state of the economy. The labor market is solid, inflation is low. We can afford to be patient as things unfold. There's no real cost to our waiting at this point. Also, the sense of it is we're not sure what the right thing will be. There should be some increase in inflation. There should be some increase in unemployment. Those call for different responses. And so until we know, potentially call for different responses. And so, until we know more, we have the ability to wait and see. And it seems to be a pretty clear decision. Everyone on the committee supported waiting. And so that's why we're waiting.
Just a very quick follow-up. There was this sort of vibe session, if you will, where the sentiments expressed in soft data did not translate into the hard economic data. How are you thinking about that when interpreting some of the signs in the softer survey data?
I think going back a number of years, the link between sentiment data and consumer spending has been weak. It's not been a strong link at all. On the other hand, we haven't had a move of this, speed and size. So it wouldn't be the case that we're looking at this and just completely dismissing it. But it's another reason to wait and see. You're right that we had a couple of years during the pandemic where people were saying just very downbeat surveys and going out and spending money. So that can happen, and that may happen to some degree here. We just don't know. This is an outsized change in sentiment, though, and so none of us is looking at this and saying that we're sure one way or the other. We're not.
Thanks, Chair Powell. Matt Egan with CNN. So you mentioned earlier that you were monitoring the shipping data, and we have seen in shipping data that imports from China into the Port of Los Angeles have plunged, and that has raised concerns about potential shortages. What tools, if any, does the Fed have to ensure that prices and inflation expectations don't get out of hand if tariffs do cause significant supply chain disruptions?
I mean, we don't have, the kind of tools that are good at dealing with supply chain problems. We don't have that at all. That's a job for the administration and for the private sector more than anything. What we can do with our interest rate tool is we can be more or less supportive of demand, and that'd be a very inefficient way to try to fix supply chain problems. But we don't see the inflation yet. We're of course reading the same stories and watching the same data as everybody else, and right now we see inflation kind of moving sideways at a fairly low level.
If I could follow up on that, President Trump has indicated that he will likely name a replacement for you when your term as chair expires next year. But Your position on the board runs through January 2028, I believe. Would you consider remaining on the Fed board even if you're no longer chair?
So I don't have anything for you on that. My whole focus is on, and my colleagues' focus is all on, trying to navigate this tricky passage we're in right now, trying to make the right decisions. We want to make the best decisions for the people that we serve. That's what we think about day and night, and this is a challenging situation, and that's 100% of our focus right now.
We don't have any major news for Thursday or Friday.
Chair Powell, Jennifer Schonberger with Yahoo Finance. Public records of your schedule so far this year show no meetings with President Trump. Past presidents Obama, Bush, and Clinton have all met with Fed chairs, and you met with Trump during his first term. Why haven't you asked for a meeting yet with the president?
I've never asked for a meeting with any president, and I never will. It's not, I wouldn't do that. There's never a reason for me to ask for a meeting. It's always been the other way.
So would you want to meet with him if given the opportunity to get more information?
It's never an initiative that I take. It's always an initiative. I don't think it's up to a Fed chair to seek a meeting with the president, although maybe some have done so. I've never done so, and I can't imagine myself doing that. I think it's always comes the other way. A president wants to meet with you, but that hasn't happened.
And if I could just ask one question on monetary policy. When it is time to cut rates, how will you determine how far down rates will have to come to try to keep a balance on the inflation mandate as employment weakens?
I think once you have a clear direction, you can make a judgment about how fast to move and that kind of thing. So it's really the harder question is the timing, I think, and when will that become clear? And fortunately, as I mentioned, we have our policy in a good place, the economy's in a good place, and it's really appropriate, we think, for us to be patient and wait for things to unfold as we get more clarity about what we should do. Thanks very much.
All right, and there you have it, folks. He was ready to go. He ain't want to answer that. That's what I said. He ain't want to answer that last question. That's why I was laughing. He did not want to answer that.
He is still in a solid position.
Now, girl, I'm not
The
asking.
unemployment rate remains low, and the labor market is at or
I'm not
near
asking
maximum
to
employment.
meet with them.
Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged.
I'm sorry.
The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Pardon me. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swing.
And as you can see, this is what the markets did when he was speaking. I did take a quick scout on here, quick short. Almost basically scratch on the day, which I'm happy with, down 42 cents. It's better than being red. Call it a scratch day. Unless I see something else here within these last 40 minutes. Other than that, we're good. And we'll be back on at 8 a.m. Go ahead and finish our power hour today, though. Whoa, I'm glad that would have been extra. What is happening? So no cuts. They decided to keep them where they were. We don't have any major news Thursday or Friday. Of course, we got earnings and stuff coming out, but no major news. So, we got OPEC. How's that? How's that feel? I'm gonna go work for a couple hours after this. A few hours. More than a few hours. Maybe. I still have not taken my day off this week. Nothing. Okay. We are gonna move this here. And we're just here at that zone we were at this morning. We entered in at 10 a.m. 10:47 was it? Yeah. 10:57. And we broke out of it. So the upside, we rejected off of VWAP, came back into it. We broke down out of it, went into that, well, we broke that previous 30-minute range from Thursday we created. We created on Thursday, retested it Tuesday, broke it today. So that's why I moved the that new range to another area where we could potentially come back down to a test sometime in the future. Since we already tested the other area twice and broke it, we just flushed right through it. I moved it. If we would have just kept bouncing out of it and never broke, bouncing out of here and never broke down through that level, I would have kept it there until we actually went to take out that level. And that's why I'm kind of keeping this here for now. The range from this morning, because we are just trending sideways, up, out of it, back down into it, down out of it, back up into it, down out of it, kind of back through it, but we're back down into it, so. I'm gonna take a quick scalp right here. Let's see, they broke support from this morning. we going lower? MACD trying to curl. Moving averages trying to curl. Let's test it. Let's test it and see. You take it. Nothing too crazy, just to put me back green on the day. So we're green for today. Better than being red. Hopefully the market presents some better moves. Actually, looking at this, guys, I should have held this until this. Are they coming to retest in the range again today? But hopefully tomorrow is better. We don't have any news, so the markets should be pretty quiet. We'll see if we get some ranging action or if we get some trend days. I seen OPEC for next week. Say 7th, 8th, 9th, 10th, which is Monday. No, so it's Friday. I mean, today's the 7th, Wednesday, Thursday, Friday, 9th, 10th. I'm so 13, so wait, so they're coming out with news. I mean, they are doing oh, that's a 9th. Okay. Yeah, that's it. Oh, that's just meetings. Okay, I was like, what? Yeah, OPEC on Tuesday. 26th is the May 26th U.S. holiday. Did it close that day? They close early. No. Glad I didn't know that, huh? What are they doing? I'm a little chilly. Oh, yeah. It's still continuing lower here. To close out the day. What kind of move is that? Kind of this channel we're in. And that's why we just didn't trade and just listen to him speak. There's no telling what the markets will do. I mean, this was before he started speaking, but then it dropped. Anybody went, it just trapped the bears really quickly with this big green candle, second green candle up, and then just sold off. But look at how big these candles are in comparison to these other candles. These are some nice size candles, right? When there's more volatility kind of in the mornings. But these candles were a little smaller. And these were big. And then when he was speaking, we got some more volume in there, so. Pipes in here. Gosh, I don't know. That beat when it comes on is just like ding. With how I fell. Why do they have these robot dogs, this little robot toy dog. Like, why do they think they need to make everything a robot or AI? It's like a little toy dog. Bull's trying to push it up here. Is that a pullback for a continuation higher? Maybe back to the top of that range, or I'll be having to work because you really, I don't know, I need to take a day off. I don't know. No days off, no days off. Take a day off, it's healthy. Market's closing in about 26 minutes. Looking at this daily candle, I'm just like, I just know it was so bearish. Let's see if I can let's see something. When did it, let me look back. I believe when we were here, let me see this blue line. Yes, and we were in that blue line there. I was like, oh my goodness, this is so bullish. Actually, before then, it was trying to flip bullish. I mean bearish. I said this was so bearish. Let me see if I replay it. If it'll, I think it's just give it. Yeah, this looks good. The candles. What if I replayed it like this? And paused it. It was somewhere like that. It was before then. Nope. Go back. I was like, oh, they want to flush it. it was before then. I can't get it, but yeah. But we did not have this wick. And I knew we wanted to come take out this low, so we were way up here. Then we got somewhere down there. Where's the lows? My bias was correct overall for the day. It's just hard getting there. We spent some time here. We bounced out of the zone. We created a range. We ranged for like 10:57, 12:30, 12:57, almost 2 hours before we broke out of it. Pulled back into it, broke out of it again, flushed down into it, and after that flush is when I actually took a short here on this second white candle, thinking I would get some more momentum to finally go to that range that was here, to the lows, and to that range that we now moved was here, and like here in the lows. Took a loss. And this, I scalped this, right? I scalped that to make back 300 of the one something I was down. Scalped this, finally got that flush to bring us positive on the day. It was up like 33 bucks. Then was back down. Back negative. But we end the day positive, so that's good. Look at this run up. 338. Are they turning it around? Not for the rest of the day. What? Maybe they could, but just a good trade right here. Sometimes you get a good move during power hour, which is the last hour of trading. There's definitely an entry there to go long. Oh, we're still in replay mode. Is they still alive? Or he still? Got about 20 minutes until the market closes. Back into that range we were in this morning. Broke out of it in both directions. And we're back in it. Broke out of it once, twice, 3 times, once, twice, 3 times. 3 times to the downside. 3 times the bears pushed it out. 4 times the bulls pushed it up out of that zone. I'm tired now. I'm sleepy now. We streamed all day today. How about that? How about them apples? Ooh, that's hard. Oh, look at that. I was just about to say, sometimes we get these nice pumps at the end of the day. Look at that. to get in or not to get in. But besides strong pumps, we get these nice moves. Wow. Wow. Look at the 1 minute. Back into that magnetic zone. Pushing us right up to initial balance high there. Are they taking us outside initial balance high? They are. Are we going to test yesterday's high? Because I will take a scalp. Get rid of that. We broke that. Yesterday's close. Going for yesterday's high. The FOMO was real. But there's not enough time for me to get it back if I make a mistake or if I get in at the wrong time. So I'm going to just wait the 17 minutes out and try again tomorrow. I don't want to end the day red after being red and getting it back green. So we'll exercise patience. Also, I don't want to so bad. I wanted to get in that because I knew where it was going, but I'm like, man, my stop is tight, and when you get candles like this, it's gonna do what it's doing now. Pull it back like that. And if you pull it back 30, 40, 50 points before going higher. Oh, my stop was wider because I took one off. Well, I would have survived. Yeah, darn. Thought I had two on still. That's alright. But usually, yeah, when it does that, your stop is too tight. It'll top you out. It'll top you out. It'll stop you out before going higher. Because it does these up and down things it's doing right now. And you want to have a stop in there because you don't want it to do what it's doing now. Pull back too deep on you. So, patience, exercise, patience, appreciate it, because we just pulled all the way back. And literally just went up there to take out yesterday's high and pull back. Just to get it done so we don't go there tomorrow. Is that the plan? Now let me look at the weekly now. Now wait a minute. And the daily. Oh my goodness, look at it go. Because what is it doing? Oh, it took out the high and the low. This is gonna be a bullish engulfing candle. If we close above, that's bullish engulfing, and I'm definitely gonna be looking for calls tomorrow. So let's see where we what was that, yesterday's open, yesterday's high. Let's see where we close at. Bullish. I came in this morning with an overall bullish bias for the day. I figured this was a pullback and we would try to go higher. I didn't know until I seen what the candle looked like throughout the day that we were gonna go lower. How bearish it was. And now looking at it, what it did, took out the high and the low. It makes sense that it was that bearish. Yeah, we went. Found support at that April 29th candle. All right. Yeah, we went down, we found a bottom, took out previous day's low. Went down, found a bottom, bounced. Just took out yesterday's high. The last 20 minutes of trading. And then look, out down here, I was like, that was a nice one to take. But when this candle already formed, I was thinking like, is it enough momentum to chase? And then I was thinking, like, sometimes we get these good moves at the end of the day, and they're really, really nice. Sometimes they're pump and dump. Sometimes they are actual moves where we just trend up for the last 30 sometimes minutes. Sometimes, you know, smaller candles, but we'll get a nice move, a nice rally. And as I was about to say it, this thing ran up. Pull this back into that magnetic range. Thing's crazy. This thing is crazy. We're gonna move this box. Take some of these lines off. At the end of the day, clean it up a little bit. Why is that locked? Why is that locked in? See, now these levels up here are areas that we have not yet tested. So you can look for setups to take longs into these areas, and from those areas we can look for shorts to go back and test this area and whatever major areas like levels of resistance that we may form within this, between this pink box and this pink box. So like we may go up and take this out, we may bounce here or bounce anywhere and then go back up, take this out. Obviously it's not that clean, you know what I mean? It could be just it could do whatever it wants to do, right? It can go here, reject there, bounce, go here, reject there, go sideways, go up, go down, finally get there, come down, go up, come down more, go up. It could do whatever it wants to do, go up, find support, finally get to this level, break through it, come down, do whatever, reject, however it wants to do it. But whatever it does, we want to pay attention to those levels. Here's sort of a level here that price may, oh look, we're selling off, that price may want to get to. But yeah, see these two levels, these equal low, almost equal lows here. They're not completely equal, like exactly equal, but we flushed those today. So now we have this new area of interest here, this pink box with the lows of today. And we could go test. Actually, I'll create a box here. I use my smaller time frames to kind of we can go test this area. Again, right? We only tested it one time, rejected from it. We'll test it and see if it's really resistant. A lot of levels like that, but yeah, we could potentially do that. These are the lower highs, so these are the lower lows. We just took that lower low. We'll see. just like when the markets are really more just in a different state than this one. I don't have that one spot to go. But I can see what it looks like on the 1 hour rocket. It looks better. Look at that. They pushed it up, they pumped it up and dumped it. Pump and dump, pump and dump. 3:52, market's closing 8 minutes. Almost quitting time. I don't know what this is. It's not bad, but oh, I'm like, what is the meaning of this? Like, what is the meaning of this? 3:54, time is 3:54. You got the 350 algorithm that pushed us up there? No, it was not. Just back up. All right, look where we're closing. Maybe we're back into that magnetic zone that we've been in since 2024. You know, the one where we keep entering into and exiting out of. Yeah, that one. The one that has a hold on the NASDAQ. Yes, that one. Looks like they want to close the New York session up for the day. Currently at 0.39%. Fluctuating. It'd be crazy if they just dumped this thing straight to 80s. Wouldn't it be? I don't know, but we are ending the day green, so I'm happy about that. Could have been worse. Could have been another losing day added to the charts. 3:58 is the time. We are trying to push out of that zone we've been in, you know, that magnetic zone. Let me just name this magnetic zone. Let me just name this magnetic. It's my caps lock. Magnetic. Do we want zone or do we want to put zone? Because this thing is like, center it. We're gonna make it bold. We like italics. We're gonna make it like a really, really big. That way it'll always be there, right? No matter what. It's just right there, man. Oh, actually, we're pushing out of it. Why won't it let me put it in the center? Like inside. There we go. Magnetic zone, baby. I'll get in the way when I'm trading, though. I could just keep it. No. Keep it over there. Like that. Time is 3:59, 5 seconds until the market concludes for the New York session. Actually, you can trade futures until 5 o'clock, but you know what? I was going to say stocks, options. Options you cannot trade past 4, but stocks, I believe they allow you now to trade until... Man, what time do they let you go? I think Robinhood now lets you go... Lets you trade post-market and lets you trade as early as 8 a.m. Is it 8 p.m.? But nonetheless, the market is closed. It is 4 o'clock. We closed green on the day. Thank you for hanging with us today. We will be back tomorrow morning at 8 a.m. Tomorrow will be a short stream, probably until 10:30 because I do need to work tomorrow. So again, thank you for hanging with me and see you tomorrow. Peace.